Well, good morning. Welcome to a brave new world. Yes, this has taken months. We have the new YouTube at last. It's all go from here, look.
This is it, a brave new world. At tastylive IG, straight in there.
At tastylive IG. Come and join us on the YouTube. Our comments section is ready for you on Liberation Day.
This is it. This is the big one, so they say.
We have been liberated from the old YouTube. And is the UK going to be liberated from getting hit with the same tariffs as everyone else?
That's a big question. Are we doing this on the same day as Liberation Day for the same reasons as Trump wanted to do this yesterday, by the way?
Yeah, absolutely.
So Trump yesterday, he said, I couldn't possibly do this on April 1st. I think it was an April Fool. Can you imagine that? It's like April Fools.
A lot of people really wish it was. Right, how are we, everybody? Glad to see you've moved across. So, Andrew McKelvey, Maturin, Carl Anderson, you guys are in the wrong chat. Move on across with you onto the new YouTube at tastylive IG. Okay, so go onto your YouTube, find it in the top section at tastylive IG. And you'll find all the rest of the community there. But yeah, we understand there will be people taking a few days to find it as they've been on holiday.
Don't worry, we've got both chats simultaneously on our screen, so we can grass you up if you're getting it wrong.
Yeah,
we can
big
move you
shout
across.
out. Steve Davies in the wrong room as well. Come on, across to the new one. Right, what is coming up on today's show then? Let's have a look.
So, nothing, it looks like. Oh no, there we go. So, we're going to be sticking here through till 8:15 with fast markets. Then coming through at 8:30, we have the psychology of trading with Ange and Isa. 9 a.m, of course, the clocks went back at the weekend, so we are back to a 9 a.m. opening bell with Angeline and Imran, and then market measures from Old MacDonald.
That's right. So Imran Laka was the man who taught me options at Credit Suisse back in 2005, if everyone can remember that far back. So Imran, I've managed to get him in today. Not only is he going to be doing our beginner's guide to options with us, but also giving his expert view on the market at this moment in time.
Lovely. Which is, well, JP Morgan pretty much said, we don't know what's going to happen.
Well, do we know what's going to happen in that Dylan Rattigan interview? That is on at 9:25.
There's
Angeline.
There's a second page. I completely thought we were moving on.
They fill up stuff that we already know is going to happen.
Yeah. Sorry about that.
9:45 a.m. trading experiences with, of course, Ange and Asan.
Excellent. Is that Dylan coming live and direct from Milan?
From Milano.
Milano.
Yeah, he's Angeline got some pressing questions for him because he's American. And today, are Americans our friend or foe? That is the question of the day.
I've spent the last couple of days listening to the All In podcasts. So we spoke about the Passant one. I think it was you that flagged it to me on Monday. And I listened to the Lutnick one yesterday. And you can kind of see what they're trying to do. I think you can. I can see the vision.
Completely.
Right? Balance the books, increase taxes basically on everybody else in the world through tariffs, try and cut some spending out of the government, reduce the size of the government. Specifically, it was interesting. They were talking about non-productive labour. So Lutnick, have you seen the Lutnick interview?
Who is non-productive labour? That seems.
He was saying, he's like, let's say we're in a room in the Oval Office, and he kept calling him DJT's in the corner over there. Scott's over here.
He calls them DJT.
Calls him DJT. Said he's known him for 30 years. He said DJT's the man.
Yeah.
And they're all sat in a room, and he was like, if we then had 10 assistants just making notes, just copying things, he's like, non-productive labour. They're not really achieving anything.
Got you.
So I think he was bounding around. He's like 40% of government headcount, he thinks, is this non-productive labour. And that's what Doge is there to try and do. So if you can cut spending, if you can slightly increase taxes on everybody else, with the vision to then cut taxes to anybody earning under 150 grand to zero.
Yeah.
GDP massively increases because domestic consumption just goes through the roof.
If they get this right, then US GDP, you're talking with a four handle, at least, which will be incredible. So real GDP of over 2% is the target. If you want a video on everything that's going on, go to the new YouTube, and if you look at the shorts there, so scroll down to the shorts and you'll see yesterday I was outside in the sunshine recording a video, and it takes you through the whole, that's on the left hand side, that's all your revenues from taxes. And then I slowly build up the, you can see we get, and how many times do you think those things blew over in the windy day yesterday as well?
I'm also quite impressed that you found so many different coloured pots.
Yeah.
I was thinking, you showed me this yesterday, I'm thinking, where have all these pots come from?
And you can see right at the top here, this is how you find the new YouTube. Anybody stuck on the old one, at TradeLive IG, search that and you'll get across. Now, let's go into some overnight action. Right, look, what has caught your eye over the last 21 hours then?
Well, I was quite surprised at how resilient the stock market was yesterday. Kind of, you had a bit of a turnaround Tuesday yesterday. You know, we've been beaten up on Monday. We rallied back yesterday. Yesterday was a weird one. Talking to clients.
Well, no, it was all over the place yesterday. Yesterday was classic. We have no idea what's going on.
Yeah, no idea what's going on.
55.40, 56.40. I mean, and then it finishes somewhere in the middle. So it was unch.
Yeah, unch at lunch.
Yeah.
But the tech stocks, so Tesla did well, Nvidia did well. So the Mag 7 kind of had a better afternoon than they had a morning.
Yeah.
Yesterday was quite strange because no one that I was chatting to wants to take big positions into this, which is sensible. And we were saying, like, reduce risk, go into it kind of with fresh eyes. So we saw a lot of trading happen yesterday, you know, taking opportunities, buying dips, selling them into strength, range trading, as opposed to saying, right, you know, I want to completely reposition my portfolio. You know, if you're in, this is how you're positioned. Or if you're short-term trading, you're in and out. So,
which means today nothing happens.
Which today nothing happens. I mean, look at the markets right now. We've got the FTSE down a third. DAX has pulled back a little bit. S&P down 0.1. Nasdaq down 0.2.
Yep.
Oil flat. Cable flat. Euro dollar flat. No one is making plays.
Yeah, it's all done. You've tidied up your portfolio, and it's classic when you get a big Fed rate decision, one of the quarterlies. Then you know that nothing's going to happen until 7 p.m. London time. This one's 9 p.m. London time. So the whole session, you'd expect nothing to happen.
Just be careful on that.
Unless there's a leak.
When I was doing some prep, I've seen 3 or 4 different places say it's 8 o'clock. It is 9 o'clock.
Was it originally?
I know. But so just don't get confused. It is 8 o'clock. Sorry, it is 9 o'clock.
London.
To get more confused.
The minute market closes, and that's, you know, that's an indicator exactly what's going on as well, right? What is happening? It was going to be 8 p.m. and somebody said, do you really want to announce this while the market's in its last hour of trade? And they've literally shifted it to the second the market closes. You know, that is a big teller. It's going to be,
yeah. So Basant came out overnight. I mean, these guys are getting headlines all over the place, saying that these, whatever scenario they fall on, and we're going to talk about that in just a second, this is the highest they will be.
It's a cap.
Yeah.
What they're going to announce is a tariff cap. 1 second before we go into that, let's look at last night's moves just to see how everything, like Luke mentioned, up 3.4% on Tesla. Nike racing back. 64.80. I'm becoming more and more confident in that stock.
And that Nike tick move.
Exactly. We've hit the bottom of the swoosh, in my opinion. Alphabet, Google up 2%. Meta, you see those strong there. Even General Electric, and then Nvidia back into the 110s. Yep. Should we have a look at the press and what they are?
Yeah, I think today is. Look, it's going to be dominated by one story alone. So let's take a look at it.
Our new YouTube.
On our new YouTube. Second story of the day.
Okay.
Yeah. Trump's doing something today.
Yeah.
But secondary to our new YouTube. So if you find the top stories on here, because there's a couple of headlines, but the one I saw was called Trump's how a 1.4 billion Trump trade war could kick off. Scroll down, scroll down, scroll down. There you go. Most read. Second, number 2.
There we go.
Yep.
Boom.
And
Right.
So this is coming at it with how much it's going to cost everybody else. So
Yeah.
You scroll down. We did an article the other day. Keep going, keep going, keep going. Here we go. So scenario 1, where it's tariffs just on Mexico, Canada, and China, right? So what we're going to go through here is different scenarios and what it's going to cost everybody else. So the US's exports to Mexico, to Canada, to China, imports, and then therefore the trade imbalances. So we can see that the biggest imbalances are to Mexico and Canada.
Yeah.
Right? Carry on scrolling down, right? Let's now put a tariff on Mexico and Canada. You probably might want to drop out, just zoom out a little bit so we can see this all in real time.
Yeah, so this is
One of those
the FT's great for doing this.
Yeah, maybe just a little bit more. There you go. Ain't no business like show business. So all these numbers now change. Instantly, the deficit widens, interestingly. The income per capita gets worse. But if you see that number for the US, it's dropped back in again. So we're looking at the pink bar on the right-hand side. The US went from something lower to minus 1.1. That dropped back in and keep going. So now what they're saying is you're going to get retaliatory measures. All of a sudden, it keeps getting worse for everybody. The tariffs are attacks. It keeps coming through.
Boy.
And now they start saying, right, well, what if you start looking at different scenarios where you start to go against the EU?
And this is what they're threatening. EU are threatening to go big today. Brussels, von der Leyen said yesterday, if we are hit with tariffs, we are ready to come back at you.
Yeah. I also saw a headline this morning that she said we need to not be naive, as Europe often is. You know, they need to go on the attack.
Okay, so and then where does global tariffs result in a universal fall in trade and income? Well, of course, the FT are going to come to that conclusion.
Exactly. So they're saying it's going to cost a lot of money. And then it just gets amplified by this retaliatory effect. So if everybody says, right, well, we're going to get 20% tariffs put on us, 20% tariffs back on you, sir.
Yeah.
And then it gets worse and worse and worse and worse and worse.
Okay, great. Chart off on that. Let me get you JP Morgan's commentary, if I can find that, because we've had a good email this morning, and this is at the bottom. It's the tariff scenario analysis, if you guys want to take a look at that. Thank you. Right, they're looking at a 10% tariff across the board. So the 3 scenarios are that today Trump comes out with, and I apologize, I can't get this any bigger, but you're looking halfway down the page with JP Morgan tariff scenario analysis, right? So if they put a 10% cap on everybody, and they also cancel or replace the Canadian and Mexican tariffs, but not China, they expect the S&P to be up 2 to 2.5%. That's not going to happen, right?
Well, that's because that's less than what they're talking about. I think the market's pricing 20% at the moment.
Yeah.
Blanket 20% is, I think, what the market's looking at the moment.
So if we're looking at a 20 to 20% tariff, which is the most likely, JP Morgan think the S&P declines 1.5%, the 10-year yield drops about 12 basis points, and Eurodollar falls to 105, right? US dollar is a safety haven. If they go even harder and they go a 35% tariff, right, one of Trump's kind of shock and awe, then you've got the S&P down 3%. I think they're way under. That S&P's down 5 if it's a 35% tariff. 10-year yield falls 20 basis points, and you see Eurodollar down at 102. Sectors to watch in particular: EU pharmaceuticals, global spirits, and of course the EU autos.
Yep, completely. Steel and aluminium and consumer goods, I think, also count in there as well. I think the interesting thing that if you look at the top of that screen as well, so CNBC are running with 3 potential options. So JP Morgan have just broken it down kind of 10, 20, 35. What CNBC is saying, if there's a blanket 20% on everybody, or there is a tiered system based on different countries.
Yeah.
So we've already seen through that FT article that US and Canada Canada and Mexico, have clearly got the biggest deficits against them. So why tariff everybody else when these are the real kind of problems? So that's number two. Or a specific country by country rate. So I think
Which will be way too complicated.
it'd be way too
come out
complicated
tonight.
But I think the market would probably prefer that. I think the problem with the market hates this uncertainty, right? No one likes it because no one has a clue what's going to happen.
Yeah.
If you come through with targeted tariffs, I mean, it was reported.
Thanks, guys.
I think we've had this kind of whipsaw of tariffs are going to be like this or tariffs are going to be like this. It was middle of last week when the automotive sector rallied because we were going to get selective tariffs, and the market I think put back on 1 to 1.5% over a couple of days.
Yeah.
Automotive really did quite well. So I think if you get more selective, the market's going to prefer that.
I think that's how we end up. I think UK, all the reports are saying that we get branded with the same brush as everybody else tonight. That a 20% tariff is reciprocal tariff is applied, but then we managed to negotiate. We're almost there already, and you end up in a scenario where it's walked back.
Yeah. This could be one of the first opportunities for Brexit to really kind of show its strength.
Yeah.
We are not the EU, and we have the ability to negotiate this flexibly. So let's see.
This could actually be the biggest win
the biggest win so far
of all. Yeah.
Yeah.
Right. Is there anything else going on in the world? That is the question. Shall we have a look at the old futures?
Yeah. Let's have a little look.
See how they are looking, because there was a bid yesterday for something called Alpha. Is it Alpha Wave? Yeah, Alpha Wave Group.
Okay.
And so you can see it. I mean, it hardly touches the sides in that aspect, but you've got a 47% rally in this thing. Now, I would bet that Andrew McKelvey knows what this is. So Qualcomm is talking about bidding for it. ARM are interested in bidding for it, but it's a chip designer.
Interesting.
So really interested to see how that one carries on, because there's been a bit of short interest in it as well. But that was one of the stories that the Times were running with this morning. Let us know if anybody has been involved in this one. Did any of our group have Alpha Wave in the portfolio yesterday?
Nice. Be a good win if you can. It's almost as. Have you seen these two IPOs that were kicking off yesterday in the States?
No.
Newsmax, NMAX.
That's what
it's up like 2,000% the last two sessions. And then there was one. It was called WTF. I'm not sure we actually got it on the platform yet.
WTF.
Yeah, it was like Wharton Financial or something like that. And anyway, that was another 700% IPO yesterday. So a client of mine sent me a text to say, if you start to see these stupid IPOs running around, there is liquidity out there.
Yeah.
And there are people willing to put money at risk. He quoted, "We are so back, baby."
This was the one that Sosnoff and Bat were talking about in the last call yesterday.
Yeah.
And they were warning the viewers not to try and short it and they don't even let them short it, because guess the borrow rate.
Oh, it's going to be obscene, isn't it? It's going to be like 150%,
550% to borrow this thing. It's like,
Yeah, it's nuts. In the UK, we've had some numbers this morning from Raspberry Pi.
how were they?
They have come out. Their revenues were down 2.4% year on year. $259 million was the number. Slightly missed expectations. Profit before tax was heavily down year on year, 57% down year on year. So not great numbers. But they are saying that a resilient FY24 against the backdrop of industry-wide destocking post an exceptional FY23. So we haven't got any early calls on that, but I will keep an eye out for you if we get any.
It's not very exciting language from what you've said there.
No.
But they are saying it's beat estimates, so it was all expected, I'm guessing.
Okay, positive.
Narrowly beat annual core profit expectations.
Right, let's have a look, see if I've got any early calls on it.
Yeah, inventory issues dented its second and third quarter profits. Not ideal.
We've got, Stingers are calling them UNCH. So right in line with expectations. So absolutely nothing going on there.
I'm sorry, but if somebody comes to me in a recently IPO'd stock and says, "What do you think of the numbers?"
And you go, unchanged.
Yeah, there's not a chance that this thing opens unchanged this morning.
No,
Not a chance. That's like when we got asked pre-market in Diageo once. The trader turned around and said, "Not to infinity in as many as you want." Paul Chalotto, classic.
Brilliant. We have seen some M&A this morning. Grafton Group are acquiring HSS, the hire company.
Ah, okay, not the ship.
Not the ship, in Ireland for 31 million euros. Pretty small.
Right.
Tiddler. SSC, Scottish and Southern, have
Yes.
also come out. They've narrowed their full year earnings per share guidance lower, unfortunately, to 155 to 160. So a bit of a trading update there. They've said that they're going to deliver 3 billion in investments this financial year. So they've tightened their earnings range.
Right, here we go. Previous guidance, 154 to 163. Right, so it's the same midpoint.
Another unch.
Is
The
it
guys
unch?
at Singers are really putting their neck on the line this morning. Another unch. God.
Let's see if Numis can do better, shall we? So Numis is saying Raspberry Pi finals in line with recent trading update. Okay, SSE down 1 to 2%. They're going for net debt guidance better than expected. So that's a positive amongst the changes there. Top Tiles up 2%. Anybody trade Tops Tiles? Never traded that one.
Never traded that one. What's their story? Tops Tiles. Sales in the first half were 4% higher than last year. Increase in living wage and national insurance is going to cost the business 4 million annual. So Gimme and a gotcha. Not much there.
Chemring up 3%.
What else have we had? We've had Wizz Air's March passenger traffic is up 6.4%. That is being called up 1%.
Tesla sales, that's what we haven't covered.
Tesla sales.
Tesla European sales were out, apparently.
I can't imagine they were good.
No, exactly. Yeah, it's This is one thing I've heard some people talk about. Some people talking about an American or American goods boycott. If we get hit with tariffs, right? What American goods would you boycott? Would you stop your Coca-Colas, your McDonald's?
Well, I don't tend to go near any of that crap.
Yeah.
Diet Coke though. Diet Coke's
Harsh.
so my wife drinks a lot of Diet Coke in the house. We don't tend to eat much.
Well, so the idea obviously is the government it's going to really hurt our economy if the government goes back and retaliates, right? But the people, that's a different thing, right? If people are stopping using Coca-Cola, McDonald's, KFC, you're not going to stop using Apple.
No.
But
I don't even. I'm a Samsung man, so haven't even been there.
Yeah. But what would you be prepared to stop using?
Oh, I'm not that political. I don't think I'd care that much. It's the whole, even Tesla.
Don't care
Teslas. I would probably still buy a Tesla if I had, because it's not like I'm not going to not buy one because
if they're putting a 20% tariff on the UK, then you wouldn't take any action against it.
But you're going to pay more for stuff. That would drive my decision making more than a political stance. So if you look at something,
that
and go,
means
well,
the
this
government
is
would have to retaliate then.
Well, not necessarily, because you could have a look at it and say, well, this is now more expensive. I'm going to actively choose to consume something else, and so my consumption drops on the tariff. So it's not.
US goods aren't going to be more expensive here. UK goods are going to be more expensive in the US.
Yeah. So we're not going to pay anything more. Is that what you're saying?
Yeah.
Yeah. So I don't have to do anything. Cool.
Yeah, but it's hurting all the companies and it's hurting the economy.
Yeah. I mean. Yeah, I don't know. I just don't think I would necessarily change it.
Pharma's not going to retaliate, right? Because he's done the necessary relationship building.
Yeah.
Europe are going to get smacked with reciprocal retaliation tariffs.
Yeah. They can't make Starbucks any more expensive, can they?
That's something I will not drink
bet.
any more of the Starbucks that I already don't drink.
Yeah, there's one at the end of the road, and occasionally on a dog walk, I'll pick one up. But that's it. Okay, I'll take a stance.
Yeah.
Screw you, Starbucks.
Yeah. I've also got a short position on. So, not talking my own book. We shall see you after the break. In the meantime, have a nice little explore of that new YouTube page. Drop us a little like. Drop us a heart, even. I don't even know which one's better. Is it better to get hearts or?
Yeah, it's definitely better to get hearts.
Or likes.
Hearts, for sure.
Because, yeah, we'd really appreciate that. The guys have been working so hard. In the gallery there, Terence has been working on this for about 3 months. And producer Phil's come up with some great new stuff. Cam is working his magic there. So the guys would really appreciate it if you drop them a little like and a heart. Thank you very much. We'll see you shortly for the market open after this break.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Welcome back to the opening bell on Wednesday, the 2nd, Liberation Day, and more importantly, Trade Live IG Day, the new YouTube channel.
And Maturin puts a very good question in there. Can we delete the old page so you don't land on it again? We are absolutely going to do that, but we just didn't want to lose anybody who's been on their Easter holidays, goes to the old page and can't find it. So we've got about 2 weeks where we're going to move everybody across, and then it will be gone for good. And this will be home. Home sweet home.
Home sweet home.
Right,
Feels like the new home. Feels like a new home, but in like a comfortable pair of slippers.
And you guys have been here on day one. Just you wait until we've got 10,000 viewers in that chat, and it will be going like crazy. We'll have to send you lot badges and make sure that you guys always pop out.
Yeah, I watched Trade Live with IG, and all they sent me was this lousy T-shirt. Right, we have got
upgrades, downgrades. Let's have a look at those.
Yes. So, what have we got on there? Probably the most important one: ASML.
Quiet day.
Cut to neutral with a 650 price target, and well, Rathbones is the only other UK name on there. YouGov, sorry, £4 cut to a neutral.
Good stuff. And then
Rathbones, £20, RBC raised to outperform.
Yeah. Let's have a look at economic calendar for today as well. What have we got apart from those tariffs?
Yeah, it's a
115 ADP employment change, as we said. There's only one thing that happened today, isn't there?
Yeah, that Trump speaks at 4 p.m. Is that the
4 p.m. London? 4 p.m. New York time.
4 p.m. New York time.
New York time. 9 p.m.
UK time.
UK time.
Yeah. Yeah.
So, right, bell time.
we've
Luke
missed
Moore,
the
let's
open.
ring that thing.
Sorry, we're too busy deciphering times. Missed the market open on our big day.
Right, it's okay, it's okay. They're taking a bit of a delayed opening anyway. We get this random opening on the FTSE at any time in the 30 seconds after 8 a.m. So we see Scottish Mortgage Trust taking a 40 basis point. That's come down recently, hasn't it?
Yeah, it's been weak.
947.
It's been weak with tech names. That's not a surprise. It's been weak. It is what it is. At the bottom of the pops today, we've got Glaxo, actually. GSK down 1.8%.
I was surprised that one was so strong yesterday, actually.
We'll have to have a look and see that is.
It was up 2% yesterday, wasn't it? I mean, obviously, pharmaceuticals, big concern.
Yeah, they will be, but it's too early to come out of the traps with anything, that to me, that's like the news is already out, that kind of move. Wizz off those passenger numbers. Interestingly, they were called up before the market, so perhaps there's been something that we've missed on that one.
What about the winners there? BP up a short 30 basis points. Marks and Spencer's. Now there was Kantar data out for the supermarkets. Proved exactly what we said. Asda has been slammed on their market share. Tesco and Aldi are the winners. Sainsbury's also a winner. So the Asda profit warning looks like it's very much stock specific. So, or company specific, I should say. Right, there's GSK down 1.5%. And yeah, Vodafone's 71.60. That's interesting. That's the lowest I've seen it in a while. You want to take a look in Europe?
Yeah, let's take a little look in Europe. Well, just notice there that whilst Wizz Air is down at the bottom there, International Consolidated Airlines, IAG, are up at the top. They're up 1% today. Should we have a look at Europe?
I don't see IAG up. Why is that?
Are they on your list?
Yeah. Right,
So in Europe, I've got if you're looking at the DAX, not surprising to see Heidelberg Materials, Siemens Energy, and Rheinmetall at the top of the DAX this morning. Not surprising whatsoever, continuing the recent strength that we've seen. Rheinmetall up 0.6 there. Hermes and Kering Group, interesting that they're, well, I say strong.
Yeah.
Up 0.5%, not particularly interesting.
Not much to speak of there, is there really? Let's take that. That's more like on the downside. BNP Paribas down 2, Soc Gen down 2. The French banks taking a hit there.
Yep. Automotives as well. Porsche, Volkswagen, Mercedes, Peugeot, Porsche again, Eni, Stellantis. Rack them up, eh?
It's interesting
car
that
manufacturer.
Those are down, fairly significantly. You would say today. There was a rumor about auto tariffs late in the afternoon yesterday that proved to be completely untrue. That's why the S&P rallied.
They did well yesterday, and it's come back after. The thing is, this is so typical of a market that hasn't got a clue what's going on.
That's it. Yeah, it's so much wait and see.
If you are a CFO of one of these businesses and you're sitting there thinking, right, we don't know what's around the corner, but we know that we need to try and continue to sell, otherwise it's going to be profit warnings all over the place.
Yeah.
How do you go about managing cost? How do you go about managing deliveries? How do you go about managing anything? It's just really difficult. And so without knowing it, it's the uncertainty that's
not to go with any rumours and only go with when it's in law and in fact and it's been applied.
Yeah.
That's the only way to change and not be chasing over. I was on the train coming back from Bristol and there was 2 students and they were complaining because part of their coursework was to write updates on every tariff announcement. And he was, he was going with the rumours and I felt like leaning across and going, mate, don't
do anything.
Don't talk about the rumours, talk about the actual facts.
Why the rumours sell
There's
the
not
facts.
that many.
No. Well, there's nothing factual yet.
Well, only the China ones. China's taken the only hit so far. Literally the only one that really applies is China.
20%.
Yeah,
20%.
2 lots of 10.
2 lots of 10, wow.
Yeah.
Yeah, okay.
That's 20.
That is 20. Or is it 10% plus 10%, so it's technically 11%?
Oh, who knows?
Could be either.
Yeah.
Again, it's not in law, so
The
don't know.
Americans probably don't know themselves.
It was like yesterday, the percent was saying for every $300 billion they strip out of government spending, it hits GDP by 1%. I'm sitting there going, well, the number's only 2-point-something% in the first place. And it's like, no, if 100% of GDP comes out to a number that's 2.1, taking 1% out of the big number means it's taking 0.01% out of the real number, if that makes sense. So it's going to be impacted by 0.02 per 300,000, 300 million, 300 billion. Too early.
Right, guys. Yeah, no, there's a conversation going on in my ear that I can't hear you and hear them as well. So, yeah, if we just come chart off on that, please, guys. Terence has noticed a very funky trick that I was not aware of that we even had, and it was this markets analysis website. And I've literally never seen this on the IG platform before. When you go to data and it's the top movers, but do you know much about this page?
No. I mean, is this a FTSE page?
Isn't that
for
funny?
one?
You go to market data.
Yeah, but this is a FTSE move, and it says the top movers are all a bunch of Scandi names. I wouldn't trust it that much.
Do you not think?
No, this is very old IG tech.
Oh, is it?
Yeah.
Oh no! I thought I'd found a new amazing.
No, I mean where it gets quite interesting is if you can see, if you've traded one market, what do other people trade?
Right.
So you tend to find a lot of sector linking in here. So
Okay.
if you've traded one car manufacturer, see what they're also trading, whether they're long, whether they're short. It's just, it's fair enough. It's there. I just don't think I've seen many clients use it. What is
No, I'd never seen it before in 8 years.
No, but what's more interesting though is kind of using TradingView a little bit to replace this, because TradingView have got some fantastic heat maps.
Yes, those.
Really good heat maps. In fact, actually, if you just, I can have a little look at them here.
Yeah, you find that, and I'll take a look at the commodity prices.
You do that, yeah.
What are commodities doing in today? Oil's come off a little bit, right? Oil, after that huge Monday, is now down at below $71 again. We've got gold, 3,115. And we've got platinum down 1%, 976. Never catches a bid, does it? And then high-grade copper back down to 506 and a half. So $506 is where high-grade copper is sitting going into. Then we've got cable, 129.90. Loves that 130 level at the moment.
It's like a magnet. I'm not surprised to see, but the call on Eurodollar, if it's kind of above between 20 and 30% tariffs, down pretty much at parity, which is a huge move.
That was 35. So 105 if it's a 20% tariff.
Which is still a decent,
Still 3%.
still 3%, 200 points coming off it straight away, 300 points coming off it straight away.
Yeah.
Very
Yeah. But that's assuming that Europe retaliate. Trump will not like that, and he'll come straight back in.
Yeah, we'll have to see how that all filters in.
So yeah, so Germany, DAX looking down 46 basis points. The CAC's around the same, down 0.5%, and FTSE 8,600, and that's the way it's.
Well, let's have a look at this heat map. So
Yeah,
for all of our clients, you can now access TradingView, and within TradingView, you can link this to your IG accounts. So one of the things it does really nicely is this heat map. Now, if you look at these with the color grading up the top here, gray is anywhere between 0 and 1%. Then it gets darker colors the further you go out. So a dark red is down 2, darker red is down 3, etc., etc. So what it gives you is a really nice visual that clearly health technology is the weakest performer today, with AstraZeneca, Haleon, and Glaxo's. If you're trying to find the green, Prudential were green yesterday, I recall.
And will this be
BP
live, like live?
This will be live.
Instant?
Yeah, this will be live data.
Brilliant.
Yep. So the percentages could be working on a delay, but it gives you the visual of what you're looking for.
Good. Right. Who have we got in this chat room then? We've got, look at that, Andrew McKelvey coming back to us on the proposed by some people, the talk going on in Europe and UK of boycotting American goods. It looks like it is an Amazon Prime subscription for Andrew McKelvey, because he's got 2.
Yeah, yeah. Netflix, I suppose, is there as well.
No, I wouldn't. Sorry, I'm not losing Netflix just for my.
ChatGPT is a great shout from the gallery. Yeah, can we stop using ChatGPT? Don't think so.
Trading Days telling us that Diageo was upgraded to a buy with 23.72 target. That's interesting. That somebody is going ahead of the tariffs tonight and upgrading Diageo, because that's one of the biggest ones at risk, of course, with Scotch whisky.
Yeah, but it's not moved the price around too much, up 0.2, which is, I suppose, a green name in a down market. So you could argue it's got some strength there.
How's Raspberry Pi?
Your raspberries are up 2.4.
Oh, not unchanged. Imagine that.
Yeah, not unchanged.
Singers, come on. Right, let's have a look at how Raspberry Pi's done, because, of course, this was the big IPO
Last year?
24 or 25?
I think it was last year. Oh, no, it's definitely not. No, it definitely wasn't this year. It was definitely last year.
Oh, sorry, yeah, I'm thinking we're in
I want to say sometime
2026.
last year.
Jeez. Yeah, there we go. So it was June of last year. That huge rally, I still don't know what that rally was all about. It was insane.
Yeah, but it was a UK tech name.
Yeah.
It was a way for people to get exposure to tech. I think that was it. Without knowing anything about the business or the hardware or anything, I just think we're so bereft of tech names. And if you think about the timing of that, it was kind of end of November into Trump's inauguration.
Yeah,
Tech just took
probably
off.
NVIDIA numbers.
Yeah, tech just took off.
But that's classic UK institution buying a stake. You know, that's your real big sluggers coming in saying, right, we need to own 3% of this thing.
Yeah, to double it though, from 350 up to 750.
Yeah, but that's the problem, is that for that last 0.5%, they don't care, because they've already bought 2.5%, and there's no stock, left on the offer. So Raspberry Pi up 2.5%. Do we have Maximus Leverage? Who has named themselves Maximus Leverage in the chat? That's one of our best ones.
That's a good one.
That's brilliant. Asking, what do we think of the S&P this time tomorrow? Where is it going to be?
I go down tomorrow, but higher in a month's time.
Yeah, I'd go with that.
I think we'll see an initial shock, because they're going to have to talk tough, right?
Yeah.
For people to take them seriously, they've spent the last 6 weeks talking tough about tariffs. If they turn around and say, actually, we're not really going to do that much, they lose all credibility. So I think they're going to have to deliver some kind of tough mantra, right? Don't forget, this is Trump's big economic policy announcement, right?
And if listening to those podcasts, you do understand why.
Oh, you just think they're trying to unlock the potential of the American people. They don't care about anybody else, really.
No.
You know, they're not managing our economy. They're not managing the European economy. They need to desperately get the trade deficit down. And if they can do that, I still think it's going to be an interesting case study for years to come in just outright confidence they're going to be able to deliver it, one, but also if you can turn around and cut a massive deficit and then turn around in 2 years' time and say, right, there is zero income tax on anyone earning under $150,000 because the External Revenue Service is charging the rest of the world for access to the US market. Oh, you'd be hard pushed not to congratulate them.
Yeah, absolutely.
Not to congratulate them.
And they've got the brain power there. They've got the entrepreneurial skills. They've got the lawyers on side. There's an article in the FT this morning that Trump's very much taken advantage of a timing in the how Trump is exploiting big law identity crisis, and this is one of the let's say he's using his power to really make sure the law firms don't go against him. So they're standing back from doing anything against them in case they get knocked out the way, and that's That's the power that he's exerting, isn't it?
I think it's a going back to this kind of case study thing. We were talking about it in our year ahead previews on the podcasts and everything that we were doing. He's assembled a crack team. Like you can have a divisive view about the man himself, but he's put together a crack team of markets people.
Yeah.
There's another thing that came out on these podcasts. Basant said he walked into a room in a discussion about the crypto fund, and he said, 90% of the people in the room are markets people. How often do you reckon people in government walk in and you've got hedge fund managers and you've got proper market heavyweights, bankers, and that might not be what people want in the room representing them as a government.
Yeah.
But if you're going to go after some kind of trade policy that is very markets focused, you want the best people in the room, and that's what he's done.
Yeah.
So the man might divide opinion, of course, and I don't want to side with him or against him, but I certainly think that he's got the tools to try and give it a go. There's an ounce of, can I say, jealousy from a government perspective from us looking over.
Completely.
How can we look at what we've got going on over here and say that they're getting it wrong? I just think it'd be arrogant of us to do that.
No, we do not have the same skill set going on in Westminster that they've got in the White House at the moment.
We probably do in the country.
Yeah,
Whether
in
we
the
have
private sector.
Correct. Whether we have that in Westminster at the moment is not. I just don't think.
No wonder for the way that people come at politicians.
No, it just needs a reset, and that's what Trump is doing. Trump is resetting the view of politicians.
Yeah.
So it's going to ruffle feathers, but
We got to stop sounding like Farage here.
no, I know. I know.
Right, one of the questions in the chat that I saw was, what are the features of the new page? Well, Maximus Leverage, we're building up to having polls available, as in not dancing in the studio. We are going to have polls on the chat. And the poll I ask you at the moment is, what is your expected move for the next 24 hours? Right, now you know that we've shown you how to do an expected move on the system, and we're going to look at that in fast markets. What's the expected move for today at 9 p.m, just in case there's any leaks? But more importantly, what's the expected move in the S&P 500 for tomorrow's close? Let's hear your guesses during the break. Before we go into fast markets, we're going to take a quick 1-minute break, and we'll be back and we'll give you the official answer. We'll see you in one.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction. Whether prices are rising, falling, or staying flat, there's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Welcome back to Fast Markets on Liberation Day / Trade Live IG Day.
Now, Waka Waka, Jules P, you are in the wrong chat. Move across to the new YouTube. Go on your YouTube search button and go Trade Live IG. Okay, with the at. Trade Live IG. We're all in the other chat room. Jules P and Waka Waka, you'll be wondering why nobody is talking to you this morning. Now, welcome to Fast Markets. So we're ready for you. We're ready to hear. Gavin Ackers is saying HES or AIG. We'll look at those ones. But first of all, shall we take a look at Eli Lilly?
Yeah, so I think let's play a game where let's try and look at the most affected sectors, okay? So we know Pharma is in the crosshairs. So let's look at Lilly. How have they been doing recently? And you've got a trade on, it looks like.
Okay, so I do. I've got a nice 1x2 on Lilly. 840 to 980, I think it is. So
I think pharmaceuticals, when you look at the tariffs, you're thinking EU is a big part of the pharmaceutical sector in the world, as is Ireland. And so you're looking at businesses that can have exposure to those two because they're going to be super sensitive.
Yep.
So we'll have to figure out how much of that is here, but it's had a discount. I mean, look at that. It's come off its highs of what, 940 down to
805.
805 now. That to me looks like a chart kind of post-announcement almost. You know, we're at support now at this 805 level, 800 level, looks like it's double bottomed.
Yeah.
Volume's coming down, you can see there, so it's being sold on less and less volume, less and less conviction. It's going to be binary, isn't it? You know, if they come out and say that tariffs are mega aggressive, you can see this coming down a couple of percent, maybe more. If it's less aggressive, it depends on what's been priced in on pharmaceuticals, right? So can we see what they've already said about pharmaceuticals? Because that'll be helpful. Let me do that.
I don't think this is just on drugs though. This is product as well, right? As in, so I met somebody yesterday who's on the trial for, is it Ozempic?
Ozempic.
And he says it's incredible.
Yeah.
Like complete suppressant of his appetite. I don't fancy it myself.
No.
But then I also don't fancy being 5 kilograms too heavy.
Clarkson was interviewed about it, and Clarkson came out. He said it didn't change his mentality. So he said he was really he didn't feel hungry, but he just felt like habitually just going to the cupboard. And he said he just felt sick all the time because he was basically trying to force stuff down and he felt ill.
Yeah. So Lilly's expected move, 44 days away, is $100. That's got some volatility there.
15%? What's that?
So
stock?
Yeah, 12%.
12%.
So I've already got the upside, right? And it goes to my top end of my upside is 980. I'm fairly happy with that. I think it goes to $900. So I think that's the $100.
So you're bullish?
Bullish in Lilly, yeah, absolutely.
Okay, cool. Should we do something in the automotive sector?
Yeah.
Let's look.
GM.
Yeah, let's have a look at General Motors.
Right, so GM, we are looking... they've got numbers on April 29th. Ooh. What do you think?
That'll be for the quarter just finished, right? So there's going to be nothing... You might get some guidance. We don't know what the impact of tariffs is going to be.
Yeah.
That's probably going to be one factor that you're going to see in the next reporting season. Is every piece of commentary is going to say, we don't know that the expectation of tariffs is going to be, right? They want to buy themselves some goodwill from their investors.
Yeah.
So that will keep a cap on the share price, I suppose. But what's that? An expected move by the end of 2 weeks' time is $2.
So,
That's a lot less than I thought it would be.
Yeah, me as well.
Less.
So 5%. Considering it was, up at 53, and it's, I think of this as a kind of $50 stock, down at 47, and limited expected move.
But again, look, it's right on its lows. It's right on its lows. If you're in the buy the dip mentality, and you think that he's going to try and protect his own automotive industry,
yeah,
you start to lean towards the buy category.
So is it selling a put down at 45?
40, yeah. How much premium would you collect from that? So 45 would be just outside the expected move, right?
Post numbers, you would take in
$1.
Yeah, 4%. So what, 3.7%? That's decent.
And when are the results? April 19th.
April 29th.
April 29th. So you've got the ability to take the 40 days, get out at 21 opportunity there. And I think that'll get you out before numbers.
Yep.
Yeah. No.
Quite like that.
Yeah, that's it. Yeah, that'll get you out before numbers.
Right, might. Well, I don't think I'll do it before
Tonight.
before tonight.
This is the thing, right? I don't think anybody's going to be chucking huge risk at the market in the next, how long have we got? 12 hours.
Yeah,
I just don't think anybody will.
agreed.
Hess. Should we have a look at Hess?
Monkey Man is asking, isn't GM partnering with NVIDIA? That's right, that was announced a few weeks ago, wasn't it? I mean, I'm not sure how big
Well, it doesn't look like it's impacted the share price too much, does it?
Yeah.
Let's have a quick look. General Motors, NVIDIA.
Right, Hess.
Hess, the oil services business.
Yeah. Let's have a look. I haven't looked at the chart for
Drill,
this
baby, drill.
for a while.
And that was the other thing. So just on a kind of more macro level, they're very aware, the Treasury are very aware that oil prices, or just energy prices in general, can really be something that's going to hamper their ability to do this. Because if energy prices are still so high, that's the cost of the pump, that's heating your homes, that's everything that they don't want. They don't want to lumber domestic American people with tons of cost. That's kind of what I can see. They're happy to lumber everybody else with some cost, but not their own people. So,
I want my government to think like that.
But could this not be bargaining, right? This is where OPEC and Russia could come in and just cut supply, roof the price of oil, and that's their negotiating tactic.
But they're talking about increasing supply. That's the problem. Russia's not going to cut. Supply.
In fact, there you go. I think by the end of the week, you're going to see tons of revisions and tons of broker upgrades and downgrades. I just think you'll just get kind of everybody will be doing their homework overnight. As soon as the announcement comes out, all those bankers are going to be working through the night trying to give their most up-to-date views and be able to try and come. Everyone's going to want to be first to market with, this is our research.
Yeah.
How much of it do you reckon is actually going to be written by AI to try and get it out quicker?
To get it quick. Yeah.
But it'll be like, right, we've modeled this, we've done this, and it'll be all coming out.
Right. Producer Phil has popped that poll in the chart then. The question was, what is your expected move for the next 24 hours in the S&P 500? The answers down 76% of you. That's a big majority.
It's a big consensus. Yeah.
That's really interesting.
And I'll give you the official number. the official expected move.
Yeah.
So on an S&P that's currently trading 5,660, there's a 120-point expected move priced in by Friday, which is not that much. That's 2%.
2%. Calling the direction's tough as well, isn't it?
It's tough. But I'm surprised it's as low as that.
Let's look at the 2-day. Right, April the 3rd expiry is what we want, isn't it?
The 3rd is tomorrow.
So that is a $9 move on the spiders. So $9 move, 1.7% on the spiders for the tariff.
Sounds quiet to me.
Do you think it's more or less than that?
We're gonna go closing price tomorrow.
The most that could be is 4. I don't think we get more than a 4% move in the S&P 500.
I don't think we get a 1.7% move in the S&P. I think by close tomorrow, you're going to see everything work its way out. People will know what's going to be bought and what's going to be sold. And I think the uncertainty of not knowing what's going to happen is gone. And therefore, people will start to do what they need to do.
Right. I think it's asymmetric. I think it's down 1.5 or down 1.7. The expected move on the way down. Up. Nobody's got risk on. Vol would absolutely get obliterated. Mm-hmm. I think up is 3. So I'm going to look at away from benefiting from, maybe selling a put down 1.7 to buy a call spread
with some upside.
Up 1.7 to up 3 and go big on that.
Go for it.
That's the only way I can. I don't want to take any single stock risk. I want to get the book down rather than increasing it. But that is the kind of risk that I think, because that also takes us down to 4. Would be what? No, 5,000. 5,500.
Yeah, I just don't think
550 S&P.
I just don't think it's going to get down there. We'll see.
Good. Right. Awesome. Thank you for joining us. Thank you for coming in this morning, Luke.
Thank you very much for having me.
And we've got Isar coming up after the break with Angeline. Join us in 2. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, welcome to Trading Psychologies. I am back with Insar, who's
Hello.
freshly back from Singapore.
Well, you say fresh. I feel pretty jet lagged. I had a great break. It was nice.
Everyone's saying, welcome back. We missed you. We missed you. Our Sachs asked what's happened to, because whilst you were away.
I don't take enough holidays, so whenever I do, I'm glad that people miss me.
Well, now you can't take any more holiday because when you take holiday, the markets go crazy.
I know, right? Nuts.
Absolutely crazy. So just I'm sure you're across it all already.
Yep.
But today, big day. We're waiting for these tariffs, of course.
We're going to find out what happens on Liberation Day.
Yeah, that's what they're calling it. 4 p.m. New York time, 9 p.m. UK time. For those of you staying up and watching this live, it is going to be a crazy ride in that last hour into the end.
No, I feel like we've had a couple of days where the last maybe 30 minutes to an hour has been total carnage. And then even the little bit of time just after hours has been like where a lot of the volatilities come in. I heard Rich just before talking about his expectations going in. Do you have any kind of thoughts on whether you think the move is going to be maybe larger than what Rich thinks, or whether it's kind of the asymmetry is going to be the same, or?
I think it's going to be largely the same or less if he sticks to the hymn sheet. I think
20%.
Yeah. I think Trump really, really loves tariffs.
I think he does love tariffs.
I mean, that is his.
What he says is his favorite word.
Yeah, and it's a stick, right? And
Yeah.
I think the indication is, wasn't he famously known for his first brief to everyone, and he was allocated an hour or something, and then someone came up to him and said the hour's up, and he was like, "This is my legacy. I'm going to continue."
I mean, it's all a bit crazy. I think they'll probably land on like the flat 20%, which is I think what they were discussing yesterday evening. I think a flat 20% is probably what is largely being priced in at the moment, but I think what is being priced in is the uncertainty. What is not really being priced in at the moment is like the actual cost of the tariffs. And so I think that's because everyone is just assuming that the tariffs will come in, it'll be very loud, and then it'll be reversed. But I kind of wanted to talk about something a little bit different today, which, so the last couple of shows, we've done a couple of different psychology concepts that have kind of built on each other. So we did a section on thinking about emotion when you're trading and how to think about intraday moves and volatility. Then we did a section on thinking about patience. So last time we spoke about delayed gratification. I think another concept that's kind of related to those things that I wanted to talk about, which we briefly mentioned 2 weeks ago, is a phenomenon called escalating commitment.
Yeah.
Escalation of commitment is this idea that when you're starting to see outcomes that are negative or not what you would like, instead of kind of cutting your losses, there's like a widespread tendency where people start to kind of double down.
You're describing my love life.
You want to explain to the guests what you mean by that? Or maybe that's one for a different...
That might be a different show.
Yeah.
But yes, completely. And you see this time and time and again when, we have, trades that we make, and then you start thinking, oh, it's getting closer to the stop, right? Do I move the stop? How many times do I move the stop?
Or still, like, now is a better entry price.
Yes.
Should I double
I'm
my...
looking cheap now.
Yeah, exactly.
Double down.
And I think you often see both sides of kind of the like biases of these trades. So when you've got winners, often people trim their winners too soon. I think this is something Axel talks about a lot. But when it comes to kind of your trades that are not doing particularly well, even longer term investments that are not doing particularly well, there are a couple of reasons why escalating commitment to the full psychology term for it, which is a mouthful, is escalating commitment to low value paths.
Ooh.
Yeah. So the reason
It's very long. You always have these very long terms.
psychologists are terrible at naming things, so
Yeah.
it's just like all of these biases and things have terrible names. But the reason that we escalate our commitments to low-value paths or negative outcomes is because, well, there's a few things. One is we have this kind of sunk cost fallacy. That's something that hopefully the viewers will be familiar with. But this idea that okay, we've already put X amount in and we've lost a certain amount, so we should try and make that loss good by continuing to invest or even investing a bit more. So that I think is one bias that is driving us down this path. The second bias is we have a loss aversion. That's again something we've spoken about in the past, which is this idea that losses weigh more heavily than gains.
More painful.
Yeah, exactly. And actually, what's funny about loss aversion is what you find is people don't want to realize their losses. They're very happy to realize their gains because then you can kind of bank a win on the win sheet.
Yeah, tick.
Yeah, exactly. Job done. But as soon as you crystallize the loss, if the loss feels more real, and because losses weigh more heavily than gains,
Yeah.
the tendency to not want to crystallize losses is higher.
Yeah.
And then the third reason is actually we want to be right
Yeah.
for a whole host of reasons, because of self-perception, because of like status
Makes you
effects.
feel good, right?
Yeah, exactly. It feels like you're winning.
Yeah.
And so what we then do is we kind of confirmation bias our way into convincing ourselves that now is an entry point that we would find favorable even if we didn't have a position in the first place. And I think that then leads people to maybe doubling down when it might not necessarily make sense to do so.
Yeah. And it kind of, you see it time and time again when people go, well, I've opened this position, and you look at it and go, wow, but the chart's telling me that this is at, an all-time high, and also we've got so many people, messaging in as well as our, asking things like, how do we get around this? So one of the things that we talk about a lot is a trading journal.
Yep.
Right? So to log, to make sure that you know your thesis beforehand. And some people I use a trading journal. I've actually sent Monkey Man one, and he sent a picture of his living room with the journal there. James Gordon uses Post-it notes. He's got Post-it notes
all over the screen,
everywhere. My goodness, right?
I record audio because I find that the act of writing
Yes.
to me, it's like it feels like an extra task to do in a way that I find is often like not that.
Interesting.
I don't know, for whatever reason, it's never really worked for me. I've tried doing lots of written journals in the past, and it's like just not worked. And so what I now do is I WhatsApp voice note to myself when I'm opening up a trade, especially when I'm on mobile and if I'm doing the trade on the go.
Explains it. Here we were thinking Isar talked to himself in the office all the time. It is true. It is true.
Exactly. But actually, there's something funny about hearing my own voice that I find it keeps me much more disciplined than just seeing it written down. Because it's like, it's not just the text that I'm seeing, it's like literally me telling me, okay, when it hits this amount, you should exit.
That's
and like
interesting.
it's almost like self-coaching, which I think personally is quite helpful for me.
And that's a great idea. So you must be an auditory learner. I find if I write it down, it crystallizes. Yeah. It has to stick forever.
So I think the thing that is happening in kind of all of these different methods of journaling or recording is you're trying to trigger, like our brain has these different processes for coming up with decisions. Often those decisions are like done through heuristics, which are kind of shortcuts that our brain takes. Psychologists describe that as like fast and frugal decision making, which is where you make decisions quickly, but they might be more biased. Or you can take a kind of more slow, deliberate decision making approach. And that tends to be less subject to bias. It tends to be much more reflective and kind of focused on the reality that you're seeing in front of you. But it's often not easy to get into that mode of thinking, and writing things down or talking aloud through them helps force that kind of deliberate, reflective decision making.
Totally. And you also talk about the having the writing down how you would feel if the trade went the wrong way or went the right way before you make the trade, right?
Yeah, so that's psychologists call that perspective taking. That's something that we've spoken about in previous sessions.
I like that because it forces you to put yourself in the future.
Yeah, I mean, even in work, I try and do them. I in a more normal setting, I call them like pre-mortems, which is like, let's imagine before the patient is actually dead. what do you think might have happened to get them to that point?
Yeah.
So like what might be the kind of situation or news event you would see in order to kind of disprove a thesis, or what would be the price action you'd see to disprove kind of your hypothesis around technical levels, for example.
It's like a decision log, right?
Yeah,
Keeping
exactly,
a detailed log of key drivers.
Yeah, so I think both of those are good at trying to ensure this kind of reflective decision making. I think two other things that are really important is specifically when it comes to escalating commitment. One is around trying to really force yourself to think about what would you do if you didn't have the existing position you had down. So if you almost try and do the opposite of the sunk cost fallacy, and you say, okay, if I was opening this position today, what would be the thesis? What would be the logic? What would be the exit points and the entry points? And then you say, okay, if that's my net exposure that I want to get to, how much exposure do I have today? Does that mean I should trim? Does that mean I should add? Or does it mean I should totally exit? And so like trying to do that exercise is a really important exercise.
Do you always stick to your target price?
No.
Oh, interesting. So you don't.
I should. But I think like everyone, I'm biased, right? And I think I often won't stick to my target price in both directions, actually. Sometimes I trim winners too soon because I see some volatility and like, oh, actually, I feel pretty good about where it is at the moment and I'm not going to let it run. Sometimes I do the opposite. I think I try to, and I think one of the things that I find really important is even if I don't stick to the target price, I always have a target price and I always note down if I'm going to deviate from that target price, why.
Yes.
And I think that's really
That's
important.
my next question. Yeah.
Yeah.
Do note it down.
Yeah, and that's one of the things I try and do with voice notes, right? So actually what I find is I don't typically do a lot of my research and entry points like live on the go, but I will sometimes do exits live and on the go. And so I think that's where kind of a quick voice recording of like, okay, this is the news that I'm seeing, or like I'm a largely macro trader, right? So if a data point comes out that might change my hypothesis, then I might deviate from that original plan. So I think having that ability to say like, would I make the same decision now, knowing what I know now, not taking into account my existing position, I think is one really important method. And then the second method that is really important is really thinking about like, how can you articulate to someone who wouldn't have been involved in the first trade, what is the rationale for the decision you're making?
Gotcha.
So actually that's where things like having a partner who you talk to about your trades, or having a friend who you talk to about your trades.
Community.
Or a community, exactly, yeah. Where you can say, actually, like, look, this is the rationale. There's something about like escalating commitment, where a lot of what we are doing is driven by self-perception around status. But actually, when you're forced to explain those decisions out loud, typically a lot of those status effects weirdly kind of go away because it stops being this hypothetical worry about what people might worry about, whether I'm making the right call or not. You kind of just get forced to explain, and that implies almost the opposite kind of peer pressure, where if you can't explain, that's more embarrassing than being wrong. And so I think trying to create a sense of community and communication is actually a really important mechanism to kind of prevent some of this escalation.
It's like having a bouncing board, right?
Yeah.
Basically, a trading bouncing
Do you know what's funny? I now actually use AI to do this quite a lot.
Oh.
Which is like, I'll open up OpenAI or Claude and I will like literally type in, okay, this is my hypothesis, like challenge me on whether you think it's viable or not viable.
Interesting.
And I'm finding that actually it can be not an amazing partner, but like actually a pretty good partner. And especially when I am trying to make a decision in isolation or I want to make it quite quickly, it can be really useful to have that kind of sounding board.
Trader friends, do let us know in the chat here. Slam it down. We'll read it out. Please share any handy tips that you use. We just using Claude, ChatGPT to kind of, be a good bouncing sounding board. If you have a certain way of doing this, do let us know. Got Frosty saying, overthinking in overdrive. Sometimes, we talk about this a lot. Analysis paralysis.
Yeah, and I think there's some stuff around, like in one of the sessions we did maybe 4 weeks ago now, we spoke about the difference between uncertainty and ambiguity. And wow, what a look into the future that session was.
Yeah.
Because I think we've had so much ambiguity since then. And actually, sorry, there's something about like well-defined versus unwell-defined positions that actually leads us to making kind of some bad calls. And so one of the reasons we might have escalating commitment is because we value the optionality of the future less than we should. One of the reasons for that is actually what you find is when you don't know exactly what will happen, you underprice the probabilities of that situation versus where you're pretty sure or you're more well defined about what the probability space might be. So if you've got an existing position, that's something you've been closer to, it's something that you feel like you understand more than all the hypothetical positions you might have if you were in cash instead. And so then you undervalue the returns you might get on the cash and you overvalue the returns of your existing positions. And so that's one of the other things that kind of in the background drives some of this escalating commitment.
And speaking of, understanding probabilities, one of the key questions that we've been asking last week is there's so much noise at the moment, right? We've got these Trump tariffs that we're waiting on, counting down to at the moment. There's so much to filter out at the moment. Just a quick reminder of where we are at the moment. Trump, of course, wasting no time after inauguration and getting tough immediately, changing up U.S. trade policy. And we've seen everything from, tariffs on Chinese goods to Canadian, Mexico, Canadian energy.
This is the summary of all the previous tariffs, right?
And we've got a handy site which I'm showing you right now as well that can take you through all this. And also what comes next, right? The Europeans have made it very clear they're not going to just stand back and take it. They're going to, they stand ready to act. The Chinese have said similar things as well.
Yeah, and there was a story actually, I think it was yesterday or maybe day before, about Japan, China, and I can't remember who the third country was, bandying up to have like a consolidated effort to respond. And it's actually extremely rare to see Japan and China agree on anything. To be honest.
Yeah.
And like, I think there's a risk that some of these tariff policies might galvanize countries against the US in terms of reciprocal tariffs. So what you might see is like Trump is trying to combat existing tariffs, but it might generate more tariffs.
Yeah. And costs basically go up for everyone. We got analysis from Yale recently saying that the tariffs could potentially cut purchasing power in the US by up to $4,000 per household. And I know that you pay close attention to the macro side of things. We have seen some credit related deterioration of the data.
In consumer credit.
Yes,
we
we've seen, the likes of Walmart warning already that tariffs are going to impact their bottom line. And it's not just
we've seen like now you can buy now, pay later delivery food. And so like, I think we're seeing at the same time kind of the delinquency rates on some of the consumer credit start to slightly tick up. We're starting to see maybe some credit spreads start to widen. We're starting to see kind of forecasts for growth maybe come down. I don't know if you can pull up the Atlanta GDP now forecast, but you can actually see that that has been really on the decline. I think honestly it's a little bit over-egged in my view, but you can see there's a version of it including the effects of gold and then adjusting for the effects of gold, and actually even the adjusted effect is still negative expected for Q1. And so like I think you're seeing some of that weakness, to be honest, before the tariffs have even come into place. So the question is, are we now kind of kicking the consumer while they're already starting to feel a bit down? And so I think that's where I would be a bit worried from a cost perspective. I think the other thing I'm really keeping an eye on is inflation expectations. So we've started again to see some of the inflation expectation surveys start to tick up. And I think like that is not something that has so far been sustained, but tariffs are exactly the kind of thing that can generate worries about inflation, even if those are not necessarily realized in actual headline goods inflation yet. And like unanchored expectations are like the Fed's worst nightmare, because that is what will shift kind of some of these concerns to more persistent trending issues rather than kind of a one-off tariff shock that they can kind of see through.
So let's talk about how this is likely to impact markets and how to trade this. Trader friends, if you've got ideas as well, please do chime in on the chat here.
Yeah, and I think there's like a really material question. to
Yeah.
me of like how much has been priced in versus how much is still yet to be priced in. And honestly, this is one of those awful scenarios, but I just don't know. It's very hard to tell.
Yeah, lots of people chiming in. Gavin Ackers, good morning to you. I file my AI. I have an options file that I share my small knowledge on the subject. I use it to pull me forward.
Yeah.
I like that. Recently, I've asked it to write me a mini course with an exam at the end. Can you send that to me as well, Gavin? I'd really like to. I like to try it because I'm a beginner too. I'm new to that option space. I'm learning every single day. It's a great tool. Do let me know. Email us at ask@ig.com. In terms of how I trade this, my humble opinion is that everyone's been looking at the chips and the tech stocks, and all that's been baked in.
Yeah.
But I think everyone has failed to bake in enough to do with pharmaceutical.
Oh, interesting.
Imports.
Because they cross borders so much.
Exactly, exactly.
It's like actually they might get hit 3 to 4 times in the supply chain rather than just once.
Yeah.
Yeah.
I often say this enough. It's not what you know, it's what you don't know that gets hit the most. Just taking a look at the likes of Pfizer and Eli Lilly as well, you already have started to see this downtick, right? So here you go. Here's a wider view. This is the daily chart there. You can see that downtick over there. And same thing with Eli Lilly as well, if I can pull that up. But, I just, to me, that hasn't been pronounced enough.
Yeah.
And I'm just wondering whether...
That is interesting. I think like actually where a lot of the edges, I agree with you, is probably in the areas that just aren't getting the coverage. So I think, yeah, people are talking about chips, they're talking about, honestly, they're also talking about consumer goods, and they're not talking about pharmaceuticals, they're not talking about maybe industrial goods, and like a lot of that, or even like agricultural products.
Yeah,
like,
that's right.
I think a lot of that is subject to risk. Like the classic example is soybean farmers in the US, which is where if anyone wants to hit the US where it hurts, you whack up your soybean tariffs as much as possible, and that hurts consumers like China, but it also really hurts the US agricultural base.
Yeah, I saw a great data point to do with soya. The US is both the world's second largest consumer and second largest producer.
Oh, really? Who's
Of
the
soybeans.
first in both?
China.
China is the largest
I mean-
consumer. Is China the largest producer as well?
It kind of like...
That is interesting.
Brazil is also always in the
yeah.
right on top, but I always find it really interesting because there was not too long ago a documentary about detailing how some physicians were thinking that soy sauce had some sort of link to infertility, and I thought, I'm going to turn this off right now. You tell that to the world's biggest, most.
Well, I was going to say actually, like the
How is this
relative gap between first and second consumption in soybeans is enormous. Like China just outconsumes basically the entire world combined.
Yeah, so that's a good hack. I'm going to keep an eye on soybeans. Trader friends, we're unfortunately running out of time. Do send all your questions and I'll get them seen by Issa and I'll answer them too. Thank you so much. Welcome back.
Yeah, thank you. It's good to be back.
Yeah, and if you need any, melatonin or anything like that, let me know. Thanks, everyone. Stay right there because we're having Rich back after this with Market Measures. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs.
Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Where am I looking then? That's the camera there, right? Okay.
Hello, welcome back. We've got Imran in the house. So Imran and I worked together at Credit Suisse 20 years ago.
You're telling people how old we are now.
Yeah, when we were 15 on school work experience. Right, we're going to dive right in, Imran, and we're going to look at the all sessions open because it is right there at 9 a.m. and we're going to have a look at those big names. So, what have you been watching recently that's taken your interest?
Well, you know these Mag 7s are getting absolutely trashed, right? So there's been a big rotation out of US stocks into Europe, into China, things like that.
Yeah.
But they are getting quite oversold down here. So, you know, some people are thinking they're a screaming buy because they still believe in that kind of tech AI story and that's going to come back. Some people are like, no, that trade's done now. Everyone's fleeing out of the US and they're all long those stocks. But whichever camp you're in, I mean, a tactical bounce as a minimum is probably quite likely, I'd say, from these levels.
That's the key, isn't it? It's you can think both is an option, and it's really dividing people. Even we had two guys in yesterday that have been in the market for double the amount of time that you and I have been in them, and they were arguing with each other. And one was a long fund manager, and one of them worked for Soros.
Okay.
And they had completely, you know, one of them, the end of American exceptionalism is done, massive rotations now, and to continue, and we haven't even seen the start of it. But the other one was, look, there's just the change, and the quality of companies that you're talking about will rise to the top again.
Yeah, and I don't know that it's the end of exceptionalism. I just think it's a rebalancing, right? It was so far gone the other way, right? That now you're addressing that a bit. He's rocking the boat, right? And but at some point, if you think about what the AI revolution really means, right? And that's where the engine of growth is going to come from, right? So, but a lot of that might already be priced in or have been priced in. So you've got to be cognizant of that. But, you know, if you did have dry powder before the sell-off, you're probably quite happy to be throwing a few bits of your pension and ISA back into some of these names, I think, right?
100% cash.
What, is that what you are?
Yeah.
Really?
I'm waiting.
Oh, still waiting?
Just waiting.
Okay.
Have I waited too long, Imran?
I don't know, man.
Question.
It's dangerous to like, I think scaling in a bit at a time, kind of giving yourself, I think that with these sort of moments in the market, I think you don't want to be too cute trying to pick your levels.
True.
Right? So I think you just say to yourself, okay, we're going through this period of weakness. I've got the dry powder to actually invest. I want it for the long term.
Yeah.
So over the next month or over the next 2 months, whatever it is, I'm going to deploy my capital, basically. Yeah. So you have a time-based averaging in process, not a price-based.
I like that. I love the old dollar cost averaging. Right, some of the moves we're seeing there then. So Tesla down 1%, Palantir down 83s, Nvidia back below 110 at just above 109. And anything else jump out at you there?
Well, I was looking at Amazon at 190. I mean, a lot of these names are, like I say, Microsoft, Google, Amazon, all of these have had very, very decent pullbacks. I mean, obviously, Tesla's bounced off the lows. Apple's actually trading much stronger than a lot of these tech names right now. I was telling you a trade that was interesting. Huh?
222 Apple.
Yeah, it's done all right relative to some of these other tech names.
True.
But with the vol so elevated, you know, selling optionality looks quite attractive here, right? But you want to keep yourself safe, right? I'm very much about safety and not blowing up your books and stuff. So I think selling credit put spreads in names that you like oversold names, offers you quite a nice yield right now.
And that is the Mag 7 specifically?
Yeah, well, it depends what names you're looking at, but yeah, I think those names are ripe for a bounce. So in names that are ripe for a bounce, if the vol's pumped and we've come to these sort of levels where tactically you think the odds of a bounce by Easter, for example, are pretty likely, then selling some May put spreads, you've got quite a good risk reward on, I think, right?
Yeah, and okay, so should we have a look at some of those in the Tasty platform? What one Microsoft was on? You mentioned.
So I was looking at Microsoft, something around the 350, 325 put spread, right? So the idea is to give yourself a cushion.
Which expiry?
May.
May. Right.
Yeah, so you want to give yourself a bit of a cushion. You want to give yourself a bit of time because, again, you don't want to be the sort of trader who's so reliant on being right all the time with the timing to the exact precision.
I wouldn't do well.
Yeah, because we're just not, right? But what we can do is we can try and put the odds in our favor, right? So we wait for certain indicators to tell us, okay, this is a bit oversold here. Everyone's panicked. Sentiment's on its knees. We've got this big catalyst in the tariff liberation day, right? That everyone's shorting the market for.
Yeah.
So it's kind of like it's setting up quite well for vol to come off a bit and for the market to bounce a bit, basically. So when it's like that, those are the times where you want to step in and look for these sort of opportunities. So if you sell the 350 put and you buy something behind it like the 325, what do we get for that?
That would be
a bit less than
277.
It's a bit less than yesterday. I was looking at yesterday; it was worth closer to sort of 380 or something, right?
Oh, wow!
So it's already moved because the stock's obviously. Where's the stock now?
382.
Okay, so the stock was like 377 when I was looking at this yesterday, right? So obviously it's rallied $5. So you could shift all those strikes up by $5 or something, right? So if you shift those up, 355, 330, something like that.
Okay, 355 to 330. Oh, that's jumped up. Oh, it's on a bit of tricky time on the old. It wants to jump up. There we go. 365. So.
But it doesn't matter which exact structure we look at, right? But the idea is that you're bringing in a bit of premium there. You've got a fixed amount that you're going to lose. You're going to have to post the margin for that distance between the strikes. So 35. So you have to post like $3,500 for that trade. You take in 600, a bit more than 600 for that trade, right?
Ooh, so that's Tasty same 2,800.
2,800, yeah, there you go. So the way to look at that is to say, well, what's my return on margin and how do I annualize that, basically, right? Yeah. So if you're investing $3,000 and in 6 weeks you make 600 on that, that's a 20% return, right?
Yeah.
So now, obviously, you can lose the $3,000, right, if it goes intrinsically in the money, right? But the beauty of options is you can risk manage that. So you actually don't have to take the whole $3,000 hit. Right? And actually you can say to yourself, well, if it goes down there and I take the mark to market hit, I'm just going to buy the stock down there at a massive discount to where it's come from, right? So as long as you've got some money to buy the stock with and you like the stock at 350 or below, then you're laughing because you can earn 20% return on this pot of $3,000.
Yeah.
In 2 weeks, if the market bounces, you're going to make $400 out of that 600 in no time. You can just unwind the trade.
Yep.
Or if the market stays weak, you can make a decision in 3 or 4 weeks' time. Okay, cut this trade, take a loss, and then buy the stock at the discount, basically, right?
And that's because if we're in a world where Microsoft trading at 340, let's say, right, and you take a $1,500, $2,000 hit, then that's the kind of point, with my pension ready to deploy, then I'm winning anyway because I want to get that money.
But the chances are you won't even take that big a hit because the way the pricing of this thing is going to behave, you're only going to lose the full, how many points is it between the 35 points, right?
Yeah.
You're only going to lose the 35 points if we're at 330 or below at expiry, right? The reality is if the stock dumps again from here, the vol's going to go even higher. That put spread's probably going to go to maybe $15 to $20. Okay, right? So even if it goes to 15, you're only down $1,100 on that, right? Or something, or even less, right? 15, you're down $900 on it, right? Yeah. So you can give yourself a mental stop and you can say, I'm going to do this trade. If and when it loses me $1,000, I'm going to cut it. And if that happens, the stock's going to be trading on its knees, and I'm going to scoop some stock up.
What about getting yourself into a complete mess like I've done in Deckers, and then if it's down there, start selling 375 calls, that kind of thing, to try and take in some of the...
Yeah, you can do it, but the thing is, the thing about doing the calls after the fact is you're selling the delta at the lows.
Yeah.
And then in the bounce back, those calls can explode in value, right?
Yeah.
So what I would say is, if you're not comfortable with, like, you've got to play out the scenarios, right? If you're going to trade the options, you've got to play out the scenarios. You've got to say, okay, what am I going to do if this happens, right? So you've already pre-planned. So you're not like suddenly taken by surprise and you're reacting in an emotional state, right? You know what the risk reward is. You've calculated it. You've worked out what you're trying to make. You've worked out what you can lose, and you've got an exact game plan of how you're going to risk manage it, right? Let's say you don't like the risk reward of selling something for 600 that could be worth $3,000, okay? And instead you're trying to play a bounce.
It's a difficult mindset to get my head around that.
Yeah, it's difficult for everyone, but remember the path this thing's going to take is not going to go straight to a $3,000 loss, right? That takes time for that to happen.
Yeah.
So you can cut that way before that happens, right?
Yeah.
So it's not really a real risk reward of 5-1 against or anything like that, right? But on the long side, if you prefer doing trades where you spend X to make 3X to make 4X, right? It's much easier to get your head around that, right? It's more attractive. It's why you're getting in the options game, for the leverage, right?
Yeah.
So then you have to look at structures like call flies on the upside, because then you're like, say, okay, it doesn't matter if the stock goes down, okay? I'm trying to play a bounce. How do I get leverage to a bounce? And you use call structures for that.
And shall we look at the spider specifically on what's going to happen tonight and over the coming weeks, and have a look at some setups there?
Yeah.
Because what's your view on what hits the tape at 9 p.m. tonight?
So
Chart off for a second, sorry guys.
it's a tricky one. I mean, you've got to think if it's a negotiating thing, which we know Trump loves to do, and they're even making those noises where they're saying, whatever we announce is a cap, and we are open to negotiation, right? We're not going to, if someone wants a phone call, that's fine. So it's pretty much saying we are going to come in with a big number, and it's up to you to make us bring it down, right?
A form of brinksmanship
Yeah.
the other side.
Yeah, so you think that the knee jerk on the tape when it hits probably lower, because it's probably going to be some big scary headline number, okay? But you've seen that happen, and you've seen how quickly markets bounce as well. So personally, I don't think it's really worth playing the short side. I think a lot of people are going to be playing the short side, and there's going to be a lot of shorts to be squeezed.
Yeah.
So, but the odds are it probably is a knee jerk lower, and then you look for some sort of rally, right? As people come to the table, as some sort of deals are made. So I think rather than
Do you have some futures in the market ready to get hit?
it's not my style of trading generally, but I don't think that's a particularly bad idea. I would zoom out and say, rather than trying to predict the next week and how the price action is going to go, where do you think we're going to be by Easter?
Okay.
Right? And so that's kind of how I would rather approach it, because that would increase, again, trying to increase my odds of success. I don't think I've got a ton of edge in predicting where we're going to be in a week, right? But by Easter, where a lot of this dust has settled and things kind of play out, do I think we're higher or lower? I think we're probably higher, right?
Agreed.
And then the question is how much higher? There seems to be a lot of resistance in that 5,800 area, right?
Yeah.
So maybe that could be a kind of target for where we're headed.
Okay. So let's look. So at the moment, the spider, so S&P 500 ETF, is trading 561. Okay, and that's of course us at about the 5,006 level. So divided by 10, you get the spider. Now, if we're looking up towards that 580 level, where we're talking about potentially resistance, so about 3.5% higher, if that's where we think we go to by April 17th?
That's our short strike. If that's where we're going, that's our short strike.
Okay, so
Right.
we sell one of those.
No, we're going to sell two of those.
We're going to sell two of them, right? So let's get right. What are the other strikes before I start adjusting the quantity? Because otherwise I'll have to reverse out of it.
Well, look, what do you get for selling two of those?
So $4.
$4. So then which options roughly costing you $4?
Like that's the way you do it. So
No, that's one way of doing it, right? You can also do it from levels where you think it's going to go. I mean, we could use round numbers. So 570, I think, is an obvious strike to buy against it.
Okay.
So that you buy one of those for 5.5, you get 4 back for the 580. So that's a 1x2 that's costing you 1.5. But the margin requirement. What's the margin requirement on that?
that is $350.
Is that it?
Yeah. Let's do it. Let's get it on.
Okay, yeah, that's pretty.
That's because of the way my portfolio is set up.
You got way too much money, Rich.
No. I wish that was the case. It's the way that my deltas are at the moment.
Oh, okay,
So
fine.
it's not penalising me for the market going
It means
on.
you're long up to your wazoo, yeah.
Yeah.
All right. Anyway, that would, in theory, depend. Yeah, that would charge you a fair bit of margin. So then you fly it off, right? So looking at what the deltas of that structure.
Just run us through what fly it off means, because it's a great
You buy
term
a call behind it. You buy a call behind it to turn it into a call fly.
to stop that maximum loss, because we haven't quite got to call flies yet.
Okay.
So it's buying one, selling two, and then
Buying one
more.
Yeah. So just to make sure that you don't go into a lot of trouble on the upside. But the
we'll buy a
thing about
590.
flies is you can make them symmetrical. So a symmetrical fly here would be 570, 580, 590, right? $10 distance between all the strikes.
Yeah.
But that 590 costs you how much? $0.50?
Yeah, 52 cents. That's
so the whole structure's costing you $2, and what's the most it can make you?
10.
10, exactly. I'm testing you now. Right. So then you might say, okay, paying 2 to make 8 profit, that's 4 to 1. Pretty decent, right? Does it need to be that decent? Like, how much delta do I actually have on the structure, right? So then that's when you look at the delta column.
Not much, is there?
There's not a lot of delta, right? So you might say, why am I doing this trade in the first place? Because I'm bullish, right? By definition, if I'm bullish, I want something with some delta,
Yeah.
right? Because what people don't understand is option structures. They look at the payoffs and they think, oh, if the market goes there, by then I'm going to make money. So this must be a really bullish trade, right? Problem is, if it rips this week, you're going to make nothing or very little,
Yeah.
right? So you've got to kind of balance the attractiveness of the payoff, the risk reward you're getting versus the Greeks of the structure, right? And the Greeks of the structure need to reflect your view.
Yeah.
So right now, this is more, because the delta is so low, this is more a contingent vol trade. This is a trade that will put us into short vol if the market rallies.
Yeah.
Right? It's not much of a delta trade. So is our when we're doing this trade, are we discussing saying, if the spot goes there, vol's going to get smashed? We didn't say anything. We said we're bullish, so we think the market's going higher.
Yeah.
So we have to make sure we reflect that in the Greeks of the trade.
Okay.
Right?
How do we get that delta up?
So then we just pull that back strike down, right?
Okay.
To maybe $5 lower. So rather than buying the 590, what does it cost to buy the 585? Another $0.50, right? Cost about $1.
Yeah, exactly.
Yeah. So then the trade's got a bit more meat on the delta.
Trying to drag this down.
So put that at 585.
Yeah, I'm trying to drag. This is just my system and not the platform, unfortunately. Okay, so yeah, let's pretend that we've paid. There we go.
There you go.
Right.
Did it do it or did it overshoot?
No, we got it. Yes.
Got it.
So
All right,
that's
what's
now
that worth?
250.
Now it's 250. So again, you're paying 250. You can make 750 profits. That's a 3-to-1 risk reward now. Okay. And what's the delta of it? 10. Okay.
Yeah.
So it's got some delta,
Yeah.
right? So the idea is, again, it's still not properly very delta heavy. But another thing you got to realize is, how is that delta going to change through time?
Right.
Right. So if we start to rally, and then we fast forward a week, that delta is going to grow.
Yeah.
Because the short strike is going to decay away. The long strike you're going to get closer to, and you're going to start to see more delta on this thing, basically, right? So it's about hitting that sweet spot of risk reward. Has it got some Greeks that I want? How's the theta? Is it bleeding badly? Is it not? Considering, is it long a load of Vega, and am I going to get hit if the vol goes down?
Yeah.
It's balancing all those factors, basically.
That's it.
Right? But I quite like that trade.
Yeah, I like that one. What I don't like is paying the 250. right? That's my thing. And if my strong view tonight is that I think there's a base level there for the 24-hour, 48-hour move, do I get brave and sell some kind of put for expiry on Friday, for example?
It's not, again, that's not my style.
Yeah.
That's not to say it doesn't work. I mean, you could say, like, if you're really sure that we get a dip first, maybe you stick in a limit order on this. Can you do that? Can you stick in a limit order rather than paying 250 for this thing? You say to yourself, if we drop 10 points, it's going to get cheaper. I can pay 2 for it, or I can pay 1.5 for it, and then do it that way.
That's interesting.
Right?
Okay, awesome. Right, we've only got a few minutes left there, but what would be the trade on Nike? So I am becoming increasingly bullish on this thing. I think they may have kitchen sinked the last set of results. We'll get the chart up now.
Yeah, stock's been crushed, right?
Absolutely crushed.
I tried to buy it for that earnings release, and overnight it looked good, and then it just got annihilated.
Boom.
Yeah.
And deservedly so from the results from the guidance, but I think that's the kitchen sink now.
Yeah.
If I think that they get incrementally better from here, and you start to get some analysts believe in the story, what do I do if I think this goes to 90 within 6 months and 110 within 12 months?
Oh wow, interesting. I'd need to look at like where the vols are and stuff, but like just as a basic rule of thumb, when a stock's doing that, chances are the vol's not low, right?
Yeah.
The vol's probably fairly elevated, because that's what happens when stocks crap out like that. Basically, am I allowed to say that? Sorry.
Yeah, absolutely. Because that's what it's done. So yeah, 32s on the vol.
Okay, but like you're looking further out in terms of time frames, right? So like when you want to look for a longer dated call, let's say, you've got to consider that if I buy this 6-month call, for example, what's the Vega risk on the call? How much could vol reset if the story does improve and we start to rally? Is there a risk that the vol comes in by 5 or 10 vol points, basically? Because then I'll be right on the delta.
Yeah.
But my option is going to be getting hurt on the Vega repricing lower. Now, if it's a real comeback story, you might get lucky and the vol might go even higher, right? That's the dream scenario. You buy a call
On the upside.
and then the market rallies and vol goes with it, right?
Yeah.
And you can make out like a bandit, right?
But it doesn't happen often.
It doesn't happen that often. You got to be a bit lucky for that. So I think if you want to kind of reduce your kind of exposure to Vega, the obvious trade is just a straight call spread.
Okay.
Right, and that gives you pretty decent leverage. If your starting call option is in the 35 to 40 delta range, if your short call option is in the 15 to 20 delta range, you find that sort of call spread.
Yeah.
And you go 6 months out, it'll usually give you half a decent risk reward, and you'll just be able to sit there, not bleeding too badly theta wise, not carrying too much Vega risk, and you can just sit there and let it play out that story.
Selling a put down.
Yeah, again, selling a put is a way of financing it, but again, you are very much changing the risk profile when you sell the put, right?
Yeah.
So it's like, why am I doing options in the first place? Like, if you're willing to sell the put, why not just buy the stock, right? Like, do you know what I mean? Because that's the thing. Like, you can use optionality because it limits your losses and it's a premium spend, and that's your max loss. Like, it's got an embedded stop loss, basically. Or you can trade options in a way where they're an alternative to buying the stock.
Yeah.
So if you were going to buy the stock, but you're saying, actually, no, I prefer to sell the put and buy the call spread, because then if the stock isn't done selling off yet, I won't actually get delivered on my short put, and I wouldn't have bought the stock here and taken a 10% drawdown.
Yeah.
Right? That would be a reason, right? So in your head, you've got to say, why am I doing this? Is it like instead of buying shares, or is it like a speculative low risk trade that I want to add on?
Yeah. Nice. Imran, as always, thank you so much for coming in. It's been great, and we're definitely welcome back anytime. We want to get you a regular, make you a regular on the show, so we get this kind of thing, because I would very much appreciate a looking at my positions and going through them when you come in and going, McDonald, what the hell are you doing in this? Why have you got so many positions in Nike? And yeah, we'll go through in a surgery session.
Nice.
That would be great. Coming up after the break, the one and only Dylan Rattigan is in the house. What a morning we're having for celebration of this new YouTube. We'll see you after the break.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Hey, trader friends, welcome back. And it's the one, the only Dylan Rattigan, all the way from Milan, live for us here at Trade Live IG. Dylan, good to see you.
Good morning. Good morning. Nice to be back with you. I like this new part of my life with you guys on Wednesday morning. You're a burst of energy, and so I always like seeing you.
Pleasure is all mine. It's like old times again. And just like old times, you know, we've got incoming tariffs. We've got, you know, the whole kind of like dirty 15 countries to be hit with tariffs. We don't know what the details are. I don't think even the Americans know, right?
No, for sure not. For sure not. Here's I try to return to the known. We know that that the cost of trade is going up.
Yeah,
we don't know where it's going up. We don't know for how long it's going up. We don't know by how much it's going up, but we know that the friction in transactions between goods and services around the world is higher and will get higher. About that, there is no dispute. We know that when the cost of transactions goes up, the probability of recession goes up. 100% chance. And so I've been looking at this from a trading perspective and from an analytical perspective, but more relevantly from a trading perspective through this lens, which is, okay, I can either sort of play crazy ball with the president of the United States and say, oh, well, is it Amazon? Basically, because it's easy to have the opinion and maybe right to have the opinion, but it's easy to have the opinion. Trump is all talk. He does this all the time. He loves the attention. He loves it he loves forcing the entire world to talk about him. He loves forcing the entire world to pay attention to him. He's like a child that was neglected that now wants everybody, look at me, look at me, look at me. And I'll take the whole world hostage economically and force everybody to look at me. But at the same time, he doesn't want that. He's like, tricked you, one more month, we'll add a month, et cetera, et cetera. So I still think there's a reasonable chance of a last second reprieve today, but just because of the temperament and culture of this White House. But either way, even if that happens, it still only adds to the uncertainty, because the issue is not even so much the tariffs at this point. The issue is that the counterparty that is the United States of America is now much less reliable, much more chaotic, much more unpredictable. So even if there are no tariffs at this point, it's still once I've shown you that I'm crazy, your ability to trust me in a business relationship or any relationship is reduced.
Anything. It's like a marriage gone bad, right?
Yeah, like once I know that you're like, once you've threatened me with a knife in the kitchen, like I just can't be like, okay, let's, who wants a cup of coffee? You know? I guess it's not the same thing. And so I guess there's a roundabout way of saying that you can get really tangled up trying to analyze what about this and what about the cars and what about Diageo and what about Ford and what about the fashion brands coming out of Europe and what about the Chinese cars and it never ends. Mexico, Canada. But coming back to the known knowns. One, probability recession is higher. What does that mean? It means you want to own bonds. It means rates are going down.
Yeah.
To cut to the chase, right? So I own the bond. I like the bond. I recommend. I believe being long the bond is a good thing, just from a trading perspective and a risk management perspective.
And we talk about this year potentially becoming the comeback for the bond markets. Things start realigning again.
Yes. The other thing we know, right? So we know probability recession is higher. So therefore we know rates are likely to come down. They are coming down. Bonds will get higher, all that stuff. We also know for sure that the level of interaction between China, Japan, and South Korea, and those three countries never work together on anything. They don't like each other historically in terms of their politics, culture, or even economics. They're rivals. They're not allies, although ultimately they're regional allies. But anyway, now those three are aligned, and they're going to look to interact commercially between Korea, Japan, and China. Also, England, France, Germany, not more typically those three nations, rivals, Brexit, we all know all the things. All of a sudden, England, France, Germany saying, what can we do together? Oh, by the way, Italy.
Let's be friends now.
And let's be friends and let's create. And by the way, now you have these intensifying European alliances, inclusive of the UK. It's going to make Brexit less relevant now, because before it was like, oh, to hell with the British. But now it's like, oh, well, it's another economy nearby. It's better than the Americans. We'll take it. And so then you have that sort of Euro alliance, and you have the Asian alliance. And you also have a back channel now between Canada and Mexico and Canada and Europe. And I'm sure Mexico and China, by the way. And so the other thing to sort of try to understand is the degree to which frictionless trade, or less friction, it won't be frictionless, but trade with reduced friction can occur around the world ex-USA, which is obviously much less for all the reasons we know: reserve currencies, depth and size and power of the American economy, blah, 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 blah. But 450 million people in Europe is not nothing. Billion, 2 billion, 3 billion in Asia, not nothing. And so what you've seen here is an incentive to reduce trade barriers in Mexico, Canada, Korea, Japan, China, Britain, France, Germany, Italy. And that is more of I don't see that as a trading opportunity, but that's more of a fundamental investment sort of thesis. The trading opportunities be long the bond. The ultimate consequence right now of what is happening is the value of everything on Earth is going down. Full stop. When you raise the cost of everything, which is what this is, you reduce the value of everything. So whether it's British equities,
erosion of value. Yeah.
It's a global value compression is the phenomenon of the moment.
I'd go even further than that, because I think that he really wants to use that tariff stick, right? He loves tariffs. It's going to continue grinding up. And I just think that he is going to go through with everything that he said he was going to go to. Full drama, full theater, like being at the Scala, you know? Opera, you know, bring it out, you know, bazooka, yeah. And then use that as further down the line as some, you know, sort of negotiation, but much further. I'm not even thinking in the next few weeks or even later today. I'm thinking, you know, a week, months, you know, that kind of thing, when everyone has felt the pain and is willing to really come to the bargaining table. And so with that in mind, I completely agree with you, Dylan, about the bonds. Completely agree with you. So I have a mix of bonds in my long and portfolio, but I kind of also, because I agree that everything is going up, I'm thinking the trade idea here is make sure we have our eyes on energy, right? Either way, whichever way you cut it,
what do you mean? When you say eyes on energy, you mean energy prices going up?
Well,
or
up,
down?
but up, and also up. ExxonMobil and Chevron and Next Era Energy, some of the ones that I'm interested in, because whether we like it or not, there are some things we can cut out of our lives, whether you're European, Asian, American, but there are some things you cannot. Yes, there are some things that you just can't really trim that much. You can trim a bit, but you will still need energy to get round. And, you know, if you run a business, you still need energy to do that. And I just think that we are going to see energy prices rise, because typically they rise when overall costs rise, right? You just pass it on. Consumer staples, exactly. Consumer staples, much unloved, Dylan, the last few years, very unloved, because everyone's like looking at tech. Everyone's putting money into Palantir. Everyone's AI,
or
AI,
luxury
AI.
goods or consumer discretionary.
Yeah, exactly. So like the Unilevers, you know, the Coca-Colas, we saw the likes of those names, Procter & Gamble, during lockdown, they did well because like they started making sure that, you know, things like the higher end, you know, beauty products, the healthcare related beauty products also did very well, higher margins there. And these products are essential, right? So relatively inelastic. I'm glad you brought up luxury too, because the very super high end, as you know, because you are a man of great taste, I understand, especially I've looked at the shoes that you create, very beautiful. But the super high end, like the Hermes, you know, they tend to do very well because their client base are extremely wealthy. So I'm just pulling up my watch list there. I've got a selection there, but Hermes is the big one that I would say in times of irrationality, higher costs all around, and that value erosion that you talked about, Dylan. On the super high end, Hermes tends to be well supported, its share prices.
Could I just add one thing to your energy discussion, which, just to go back to that for a second? I agree with everything you're saying. I would just layer against that also the power generation, the Duke Energies and the Exelons, because in addition to everything you just described, you also do have the second gen AI, the uptake rate for the AI applications that all results in electricity demand. And if you look at Exelon and Duke,
need energy,
all that.
Yeah.
And those guys are cranking, obviously. So
they are cranking. And if you've seen Asians take photos of their meals, my God, I'm not in that camp, but they, you know, all this needs storage space, right? And AI, you know, all that needs space.
Melting the GPUs is the slang that the kids use.
Melting the GPUs.
Melting the GPUs. That's what they say. Like that used to be like burning. They used to be you would burn rubber on the tires of your car.
Yeah.
But now apparently it's burning the GPUs.
I'm not that cool. Obviously, you're cooler than I am.
I don't even know really exactly what a GPU is. So.
General processing unit?
Burning it probably is not great.
Yeah.
That would be my guess.
We have to wrap soon, but just so very quickly, your thoughts on the defensive / sin stocks. What do you think of tobacco, alcohol?
I don't like them. I'll tell you why. if you look at the wine, but just look at the popularity of alcohol on the among the younger generations is, I won't say it's in a free fall, but it is clearly declining. And so I don't see, I mean, I think that all those names, tobacco is a different sort of ball of wax, which everybody kind of has heard and knows. You have to have an opinion on, like, wherever they still smoke. It's basically illegal to smoke in the United States at this point, and even here in Italy, which was one of the smoking capitals of the world, it is a catastrophic decline from their perspective. I mean, it's got to be down 60% in Italy. Alcohol, same issue. I mean, they're ripping the vines out of the ground in France, in Italy, in California, because there's a wine glut. There's too much of it, and there's not enough demand. It's not what's happening. And so I think it's all. I blame Instagram for the whole thing, honestly. But apparently the young people know they no more. They don't smoke. They don't drink. They don't have sex. They don't do anything. I don't even know what they're just sitting.
They're watching Netflix. That's what they're doing.
Netflix and Instagram
TikTok.
or whatever, TikTok.
Yeah,
I don't know.
yeah.
TikTok. They're burning the GPUs.
They're burning GPUs. And on that note, we have to go. It's a pleasure. We will see you. Next week, same time, same
with
place.
Rich, I hope.
Yeah.
But not where, next week with Rich. You're not here next week, which is going to be sad for everybody. But we'll have to survive it.
See you soon. Bye, Dennis.
Bye.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and your usual favorites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, welcome to Trading Experiences with She's back for the next installment of Trading Experiences with me. How are you?
I'm doing great. How are you, Anjali?
I'm very good indeed. Dylan and I are just talking about, smoking and...
and her mate, I heard.
Phil said the S word. I can't say the S word, but you can. Dylan said it. He did. But we were talking about, I was asking him about sin stocks like tobacco, and he was like, no one smokes these days. No one even does the S word. And then you came in after him, and I said, do you smoke? And then you said,
yeah.
Wow, I would not have. What do you smoke?
Cigarettes?
Yeah, like what brand?
Benson Hedges.
Oh.
I don't know whether it's trademark. Am I allowed to say it?
It's fine. I'm just it's good market research for me because do most of your friends now smoke or no longer smoke, or do they vape?
Smoke, vape, some quit. I quit.
Wow, how long did it take you?
Quitting's easy. I've done it many times.
Okay, wow, many times. I love it. Speaking of which, gold. We spoke about gold the last time you were on.
Yep.
And then we had options of ways of trading gold. And I gave you a couple of options, and you went with one of them. Talk our viewers and clients through what happened.
So we went along with gold, and we had planned that we would exit before sometime before the 2nd of April, before Liberation Day.
Yeah, which we have done.
Which we have done, and we did so on Friday. Gold on towards the end of last week, just started breaking all the rules. It wasn't following any logical sense.
No.
And just to be on the safer side, given our risk appetite that we discussed, given my risk appetite, we decided to exit.
And what's also interesting about gold is that you're right. It did actually go through the technicals, and we saw that it broke all rules, right? All rules. I met up with the CEO of Metals Daily last week as well, and I said, what is going on here? Because we're seeing both technical rules not being obeyed, and we also saw that fundamentally it shouldn't have gone that high, but it did. And he was saying that even for a Metals Daily, you're seeing that a lot of the noise was coming via Asia, a lot of trade was coming via India. There was a huge amount of open interest ahead of Liberation Day. That's what they're calling it, April 2nd. And I said to Hassan, if we see this continuing, we have to come off. And it's a good thing we had the stops on, because that's why we have stops, right? To make sure that we don't have our back uncovered.
We don't want to overplay our hand.
Exactly. And we came out before then. We made a small loss, but we came out before then. And can you see now, it's a good thing that we have guardrails in place, because look at that March higher. I mean, this March higher, just whacking out my screen, if you can see it there, Phil, comes even with volume not surging. It's incredible. There must be several actors in the market, or maybe algos that have kicked in, but we're seeing broad-based support there, and it keeps whacking higher. I've called up some well-known analysts as well, and they're also saying that it is really odd, because our time, London time, from Thursday onwards, around that 2 p.m. mark, we were seeing that momentum ride higher. And I'm just going to show you the hourly chart here to tell you what I mean. If you see here, the hourly chart, and I'm going back to Friday as well, and Thursday, we're seeing big spikes in momentum. Can you see after lunchtime? Can you see that big green candle there? Similarly, you're seeing over here on Friday, around after lunchtime as well, and into the afternoon, you see that green candle. So at the moment, I would say when you see something break out like that, and of course, with gold, we have nothing to compare this with, right? If I go back weekly, this is uncharted territory, people, uncharted territory. And if they're not obeying rules, and I've shown you the lines there, can you see it's just broken out time and time again? I would come off as we did and then wait for the technicals and fundamentals to kind of kick in again. Because when it breaks away like this, you're literally licking your finger and doing this.
Yes, and you never know when it's going to retrace or move back towards the last resistance. Well, at this point in time.
Yeah,
there's
and
no
especially
resistance.
as we're counting down to tonight, right?
Yeah.
Especially as we're counting down to tonight. A gentle reminder, those of you waiting for that announcement and watching it like myself, I'm probably going to need to pour myself a glass of wine for that. It is going to be 4 p.m. UK time when the tariffs start being unveiled, and that is 9 p.m. Is that right? Because we're British summertime now, right?
Yeah.
4, 5, 6, 7, 8. Yeah.
That is-
Nine our time. So yeah, be aware of what's happening around you, because fundamentals really play, especially politics in this time and age, because of what we're seeing from across the Atlantic.
And that's kind of a great segue into what we want to talk about next, right? Copper. We can talk about copper.
Yeah.
We are going to talk about copper.
Yeah. Let's do it. So you're interested in copper. Why?
Just given the trajectory of the demand over the last, following the dip in price in 2020, the trajectory it's taken, just the demand for copper is going in one direction, given infrastructure projects across the world, the biggest consumers, China being one, the US being one. I'm talking about not excluding the last few weeks, if we keep that aside, because that's played a big hand in the way copper price is moving nowadays, right? But demand for EV demand was on the rise. There was the renewable energy sector was on, and copper is like a ingredient to all of those industries, right? It's an important one, and yeah, it just got me interested. Valuing copper. I think in the first episode I spoke about this. The valuation of copper, dirty copper, I just found it fascinating. That was actually one of the first commodities I started trading. Mm-hmm. I just stuck with it.
Oh, nice. We always remember the first, right?
Yeah.
I remember Antofagasta, which is incidentally a copper, but we always remember the first.
Yeah, but it's trading at or close to all-time highs over recent periods, right? And that's driven by a couple of factors. Firstly, there's like a big tug of war going on between demand and supply within the market as a whole. There's expectations that tariffs are going to kick in 25% on copper, similar to how you have on steel and the other metals, right? And at the same time, you have demand pulling back, and then you have demand rising in certain industries as well. However, in the US specifically, given the fear of tariffs coming in, there's a lot of stockpiling going on for copper for copper products, just ahead of the tariffs kicking in, and demand's going up. There's supply constraints. There's orders. I think order cancellations are at an all-time high over the last 12 months, if I'm not mistaken. I was reading that somewhere, and price is gonna kind of, if your demand's going up and your supply is coming down, price is only gonna head in one direction.
Yeah.
As in, it's been going in one direction, not it's gonna head. Now, a lot of the fear in tariffs, markets obviously in most instances kind of price the fear in. It is done so in copper, but then what's going to happen tomorrow? What's going to happen the day after tomorrow, right? And there are different analysts in the market who some are bullish, some are bearish, some say that the trend is going to carry on, some say no, it's not going to crash, but it's going to retrace it's going to correct significantly. What do you think?
So here's how we trim the noise. Here's how we try and filter some of that out, because there's a lot happening right now, right? And here's how we gain the edge. So you're right in saying that tariffs and the whole demand situation at the moment is looking favorable. However, it is very important to note that because of the tariffs and because of the weakness in China, it's very volatile, as you can see from the share price, right? So just showing you, whacking up the share price, if we may, producer Phil. And I really recommend that if you trade this, Hassan, you have very, very tight stops, because, we saw a blip up recently for the price because of the manufacturing data that came out of China that showed that it was still above in expansion, indicating growth, 51.2 in March. However, then we saw that, these tariff mood music start to come out. And then we saw copper prices, start to come down because of uncertainty as well. Not forgetting, we've got China's property market. Want to guess if you owned a property in China, how would you be feeling right now?
Not confident.
Yeah. And, I mean, it tells you a lot, right? If last October we were sat here, and Frank and myself, and we're talking about, oh my goodness, they've actually come up with a solution where the Chinese are allowing people to go to the banks. They basically audit the banks. If someone has a 5-year mortgage or a 10-year mortgage and they haven't come to the end of the term, you have to let them remortgage without, strict penalties. You have to facilitate this, whether it is in your paperwork or not, right? Because there are people out there and they've bought a house or a flat, for example, let's just say 100K, and then suddenly things have got really tough, and then it becomes 80K, but you're still servicing a mortgage for 100K. Loads and loads of data points out there. When you trade copper, make sure you pay attention to these pain points like China's property sector, because a lot of the building, and you're right, guess how much as a percentage China's infrastructure, specifically property, guess how much copper it represents in terms of demand?
Must be high double digits.
It's double digit, well done, but not high, but still, sizable, 12%.
That's high, 12% of global copper demand.
Yeah, that's huge, right? Yeah. But like not 18.
No.
Yeah. But it's really important to understand this, because China Vanke, which is one of their biggest developers, and it's not like here where you buy old property and you redo it up. There, it's all about new, the shiny, brand new shiny thing. And so the big developers are the ones that when they come out with outlook, are we doing well? Are we in trouble? They're the ones that give you an indication as to whether copper demand is going to go up or down. Vanke has recently said, like, if you're an upcoming tech, just come from the suburbs of China, now have a flashy new job, in the city, you want to be buying a flat made by China Vanke, right? They're kind of like the trusted leading construction real estate developer. They've had a significant loss of $6.8 billion, first loss since 1991, plus numerous other issues, right? Contract sales falling 41%. So it gives you a good idea that it's not great. The other thing is job market in China and the US. The US still holding up nicely.
Yeah.
The job market in China, not so much. Okay, you're seeing a lot of weakness there. Lots of people coming out of university, not able to get jobs. More people, more than jobs available. Not great for if you want to buy your first home, right? There's the global trade uncertainty as well that's weighing down on this, which is why a lot of people are holding back before jumping in.
Exactly. That's what I was going to say as well. I currently you trade when you have time. Right now, there's little time available for me to trade, day trade at the moment, so I'm staying away from it. Copper in particular, I wouldn't trade now, personally, just given the uncertainty that's there in the market. We were talking about China as in fair point, but then how does that play off against other Asian countries where demand is going up? India's invested 7% more in their infrastructure projects than they were, for example, before, right? As in, China is a big player. Yes, they move the needle, but there are other economies, other countries where there is investment in infrastructure. Maybe not enough to move the needle individually, but collectively, it could. But you just don't know. The tug of war between the demand and supply factors is just, I don't know which way it's going to swing.
Which is why duration is important.
Exactly.
Right? So if you think it's going to swing towards the downside because of weak demand and trade uncertainty, and you have a short duration, then I think potentially we could go lower. But if you think that we're going to see after 9 o'clock tonight, we don't see any more tariffs that might curtail demand for copper. We certainly, if we see and this is all if, because we haven't got to 9 p.m. tonight. And if we see that actually the tariffs weren't as bad as expected, and that copper supply developments, don't forget it's the demand and supply side, right? At the moment, copper supply, just showing you why I've got those lines there. We've got a lot of copper output currently being curtailed or stuck, right? We've got Cobre Panama, which it's on its own contributes 1.5% of global copper output. Their production has issues, right? It could potentially ship, but right now it's got issues, and there's no date yet as to when these issues are going to be resolved. Then we've got also this constriction, whereby if we see tariffs on copper, we could see that a lot of the copper doesn't get, because then everyone's now trying to rush things across borders.
Exactly.
Rush materials across borders. That could also constrict supply.
And it has, right?
Yeah, it
what
has.
I was saying before, your order cancellations are at an all-time high. Plus, like you were saying, there's supply issues now.
Yeah.
The copper grades are declining as well, and setting up new mines doesn't take weeks or months. It takes what's the average? 10 to 15 years.
10 to
set up a new
15
copper mine?
years. And as I said, any proper miner will tell you that they can do everything, make all the core drills, hire someone who, is a geologist. You won't ever know what's there until you blow a huge hole in the ground.
Exactly.
So, supply disruptions, labor strikes, that at the moment still, giving, we're seeing some constriction, if you like. And therefore, that's why we're going to end on the yellow lines there. If you're taking a longer term view, people in copper, and if you're bullish, what I'm looking for is for this line to potentially break above that 9,752 mark. If we break above that with conviction, then the next port of call will be 9,824. And if we break above that as well with conviction, then it's 9,895. But if we fail, Ash, then we take it off.
No, fair. But one critical thing that you said, with conviction, that matters.
Yeah, that matters. And on that note, we have to leave it there. And I look forward to welcoming you back next week. I think Rich will be doing next week because I'm off. But give us a teaser as to what you'd like to talk about next.
As in, we can dig into copper more, and we can talk about something.
I like that pun.
Yeah, we can. Thank you. I didn't think you'd clock onto that, but thank you. And then maybe we can talk about an energy commodity.
Yes, because you used to work in that space.
Yeah, I did.
Fantastic. Right. We'll stay right there. And thank you very much, all of you who have joined our new Trade Live IG site. It's so good to have all of you ported across safely, because today was our relaunch. Do also follow me on the Twitter page, because I have tweeted some behind the scenes from this morning. So we will see you there.
T-1 until Liberation Day. It's Tuesday, April 1st, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan as we take you through the rest of the trading day. Futures market closes at 5 Eastern, 4 Central. If you're already on the platform, if you're already on tastylive.com, thanks for joining us. Hope you continue watching. Otherwise, head over to YouTube where we're also streaming. Join the chat there. Tell us what you think of these markets, what you think of this back and forth price action today. I'm not feeling too comfortable or cool under the collar here, guys. Feeling like there's not much edge heading into tomorrow's turn of events, but we'll see what you two think. Stocks ultimately do resolve themselves mostly higher. A day where we were dipping lower now. The S&P 500 closes up by 0.38%, 56.75. You have your NASDAQ up by about 0.86%, 19,605. The Russell's flat. The Dow Jones is down by 0.05%. Bond yields are lower across the board. Metals perk up and then come in. We see a dollar ultimately sells off by the end of the session. energy rather uninteresting. Dylan, jokes aside about making sense of bonds doing well in any environment here at the end of last call, you were alluding to an environment where it seems like there's a lot of chaos and confusion underlying everything. I was just saying here to you guys in the green room that I feel like I have the least amount of edge I've ever had in my trading and professional career, perhaps, going into tomorrow. Talk me off the ledge, Mr. Radigan. Why is everything going to be fine for tomorrow?
Well, I mean, I think it's not about, I don't know that I can do that. I think that you have to come to terms with the fact that America's leadership is the most unreliable and adversarial in modern history. And as a result, all assets on Earth are 10 to 20% less valuable. And so I think the easiest way to make peace with the situation is not to try to pick this or this or this or this. It's to understand that the economic value of everything on Earth has been compressed because the most valuable and most important counterparty on Earth has become unpredictable and unstable. And so then if you understand that everything is, 10 to 20% less valuable on Earth, and then, and all the charts show this. You can keep flipping charts. You'll see the same reality. The question becomes, okay, well, I guess there's two questions. One, are the tariffs tomorrow an April Fool's joke? And will there be a last-second delay? Very easily could be. But at this point, even if there is a reprieve on the tariffs, it'll just validate that the American president is a psychopath nut job. So this even if you really
the key, really,
yeah. So even if you get relief in the, and the point is,
if the show continues, the show doesn't continue, because a continuation of the show would be exactly what the problem is. The problem isn't the substance of the policy, which the markets could have generally known and did back to November. It's the implementation and the fog. Exactly.
And so the reason I say everything on Earth is worth 10 to 20% less is not based on whether or not the tariffs are announced tomorrow or not. Rather, it's that the road to getting here and the temperament of the counterparty has proven to be an unstable lunatic. And as a result, everything is less valuable. It's like if you're driving in a car and if everybody in the world is riding a bus and everybody on the bus knows that the driver of the bus is hammered on whiskey, then that bus is by definition more dangerous for everybody riding it. And as such, it has a higher aggregate risk profile, which is what the whole world has right now, more risk on Earth. As a result, less economic value, diminished economic expectations, et cetera, et cetera, et cetera.
Ilya, heading into tomorrow's Liberation Day, we find a market that had a slight risk-off tone overnight and sentiment improved over the course of the session. Gold touched a new all-time high. Yields moved lower. ZB was only up close to 119 at one point. ZN is closing at we'll say what down here. I think this is a closing high for the year in the notes as it is. Closing high for the year in the notes as well. You seem convinced, as you were trying to explain at the end of last call, it almost feels like there's some narrative flexibility here for bonds right now. If the tariffs are high, the tariffs are low, growth is slowing either way in the short term.
That's it. At the end of the day, we're going to get a tariff announcement. It will be some kind of an announcement of something. I don't mean that facetiously. I mean that nobody actually knows. The president was asked whether he's finally settled on a plan. He said yes. That was it. Here's where the confusion is. If the tariffs are supposed to be reciprocal, how do you do that? Do you set up parallel regimes with different countries that mirror what they apply to us? And how absurd does that get? The Economist, for example, has an example of Colombia that puts a 70% tariff on coffee. We don't export coffee. Are we going to put a 70% tariff on coffee for U.S. exports to Colombia that are largely non-existent? Is this a rule that we need? Nobody knows. If we don't do specific one-for-one tariffs, are we going to do average tariffs? How do we calculate that? What about non-tariff barriers? The president said he wanted to mirror those back at the trading partners. How does that work? Nobody knows. So this is really confusing, and rightly so. And so business leaders have pulled back spending, and consumers aren't confident about what comes next. Understandably so. It's very difficult to make heads or tails on what any of this is. What we do know, though, is that some kind of tariffs are coming. Tariffs, we've heard from the Fed, are generally bad for growth and generally a boost to inflation, but the Fed is open-minded to the idea that the boost to inflation is a one-off adjustment, maybe. But whether it is or isn't, that's a question. We do know it's bad for growth. And so the one outlet here, no matter what the substance of this is and whether the stock market thinks it got its certainty or it didn't, is rate cuts. And that means higher bonds.
I mean, the other thing that's interesting, and I don't disagree, I think the higher bond play is the sort of the risk, the most conservative way to get a trading position on at this moment is that. But I'm sort of contemplating whether it's that there's a lot of headlines in Europe today about Brussels using a tariff sledgehammer against large American technology companies and large American banks and restricting or eliminating their access to the 450 million consumers in Europe. You also have Japan, South Korea, and China talking about a coordinated attack on all U.S. So whether it's Apple, whether it's Google, whether it's Tesla, whether it's Disney, whether it's J.P. Morgan, now you're going to see at least, I mean, who knows how much of this ever happens, quite honestly. But rhetorically, in terms of the rhetoric in Brussels, the rhetoric in Beijing, the rhetoric in Tokyo, the rhetoric in Seoul is, well, listen, we represent 1 billion consumers of American technology, American banks, American cars, American product, and we'll use a sledgehammer on you. And so now you're sort of in this rhetorical race to the bottom, which I would say the obvious trade is to buy the bond, because no matter what happens, it's bad for growth and it's bad for confidence, which is a good for lower rates, I guess. And as a result, good for higher bonds. But also, I still think there's some room to be, the madman's delight, to use a term of our own invention from the three of us last year, would be to get short the tariffs. That ultimately these tariffs will, even if they're announced, will not be implemented by virtue of the sort of mutually assured economic destruction that's being brought to the table at this point, whether it's the aggressive rhetoric from Europe against all big American technology companies and all big American financial services firms, or the coordinated response that is being defined right now in Asia between China, South Korea, and Japan in direct attack on all American products. It's hard to see how this is good for any business on earth. Full stop.
All of which is to say there will be a negative economic response, and that negative economic response will require rate cuts. That's really a higher
bond.
As far as I'm concerned, that's the only sense you can make of this so far. And the question for stocks will be, do you get a durable thing that is announced tomorrow that you could extrapolate? And then stocks might say, okay, well, it's bad, but this is something businesses could benchmark against for the next year, 2 years, 3 years, maybe even. Maybe we're finally done with this back and forth, and we can move on to extending the tax cuts from the first administration, the other big objectives to get done for the second half of this year before midterms next year. So the calculus here politically is you got to get this stuff done. the rush to end the wars in Russia and Ukraine, as well as the Israel-Hamas theater, sort of part of that story. You have to get all this bull in a china shop stuff done so you can do the taxes, so you can run in the midterms next year, loosely speaking. And so when you get this announcement, maybe you finally get clarity. And then everybody goes, okay, fine. This is awful or not awful, but whatever it is, it is. And now we can map out what we're going to do next. And markets settle because they find their new baseline. Or, as recent history would suggest, you don't get clarity. You get what we've all surmised are tariffs as a negotiating tactic, which means it's an opening bid that can be negotiated down. The president can change its mind. The trading partners can come back and say, okay, opening bid received, now let's negotiate. And now everybody has to wait for the negotiation to continue. More uncertainty. So if you don't get that, well, then stocks probably react negatively because, again, they don't know what's going on in 3 to 6 months, and neither do businesses and neither do consumers, which is obviously a dampening effect on all manner of economic activity. Then stocks don't like it. But either way, you're going to need rate cuts.
I mean, how about this? Globalism, or globalization, I won't say globalism, I guess that's more political. Economically, globalization of economic activity is being reduced. I won't get
very clearly so. Yes.
No question.
No question.
To the degree to which global economic activity, trade between China and America, America and Europe, Europe and America, Canada and America, America and South America, whatever it is all on the decline. Full stop.
And all of that on top of it is potentially inflationary depending on whether these barriers stick around. So there was an interesting timeline that came out that basically said either way the tariffs lead to disinflation, which is an interesting thing because on one hand that's true. If you crash the economy, inflation will go down. If you slow economic activity, inflation will be cooler. If you set up reciprocal tariffs and other countries say, you know what, rather than fight you, we're going to lower our tariffs, so you have to lower yours. And this is a kind of shadow WTO, a kind of way to say, instead of having the WTO, the U.S. will just create a parallel WTO, neuter the existing one, and say, we're overtly in charge. There's no even pretense to this being a multilateral organization. This is a shadow WTO that we run. And everybody lowers their trade barriers in response. Maybe, fanciful, but maybe. And then there's disinflation then. But if tariffs remain, however benign or certain or whatever, that's inflationary for the longer haul, whether you have a recession near term or you don't.
I mean, I've seen a lot of people say, even economists who are partial to the Trump tariffs. Oren Cass, who runs American Compass and has been making the rounds in media to support Trump. He was on the Daily Show last night with Jon Stewart. He said today, quote that came out, if you want auto companies to build more domestic plants, if you want steel companies to expand domestic production, they need to have some understanding of what the long-term outlook is for tariff policy. He continues, you get the costs and disruptions with tariffs without the upside of the investment otherwise. And that's kind of where we are right now, right? We have the disruptions and the costs of the tariffs. Lumber prices have moved. Steel prices have moved. We've seen that companies are beginning to steel producer in Cleveland just cut 1,200 workers because of the uptick in costs and now lack of demand for their goods. They just can't afford it. Can't keep the doors open, right? So the tariffs aren't necessarily there yet, but we've had all the costs and disruptions start to be levied. But we don't officially know if they're going to be in here for a long time, if they're going to stick around or even be implemented. Now, tomorrow, the announcement is at 4 p.m. Eastern, purportedly. I say purportedly because last week we had the auto tariffs announcement at 4 p.m. Eastern, and we didn't get them in the middle of the show. We actually got them around 5:15, 5:20 p.m. Eastern. So there's a chance that the announcement comes when futures are closed or occurring at a point in the day where you can't execute any futures trading, right? Keeping that in mind, then it sets up for a very interesting open. Tomorrow night, 6 p.m. Eastern, 5 Central, you're going to probably have a gap in some form or fashion. What makes this so interesting to me is that when asked today by the press, the White House press secretary was, what plan is he effectively going with? And she said, my understanding is that the president will have a plan to announce tomorrow.
Yeah.
So it doesn't seem, I don't know why, I don't know what the incentive is to not announce the plan. Maybe, again, negotiating tactic, or all these other countries, they're afraid of what the announcement will actually say. So between now and 4 p.m. Eastern tomorrow, they fold, they do everything they can to, take down tariff rates. Israel did something similar today. They've been in a free trade agreement with the U.S. since the 1980s. And what have we seen? About 98% of their goods were tax tariff-free. The remaining 2% of the goods will now go into tariff-free as well. Perhaps that's the goal here. But there's the real politic of this all that is kind of scratching my brain. Dylan, I can't think of a time in my life when China, South Korea, and Japan agreed on a single thing. I think that's been a defining feature of global history for the past 80 years, that these three countries, generally speaking, do not get along. If only to that further underscore that point, Japan and South Korea were still having diplomatic rows a few years ago about how Japan treated South Korean women during
like
World War
England,
II.
Germany, and France. I mean, Donald Trump unifies regional adversaries like nothing before his occurrence, whether it's the British, the French, and the Germans, or the South Koreans, the Japanese, and the Chinese. Everybody's now in the same room together because maybe your enemy's enemy is your friend, kind of thing. You're into a situation where why wouldn't China, South Korea, and Japan coordinate a unilateral retaliation against the United States? Why wouldn't Germany, Italy, France, and England all coordinate, and Spain coordinate a retaliation against the United States? Stop allowing the sale of any Apple products in Europe or Asia. Stop allowing the availability of any European or any American financial services companies in Europe or Asia. Stop allowing the distribution of any American entertainment products in Europe or Asia. Hollywood, Silicon Valley, and Wall Street are the three major exports to the world. And the billion-odd people in Asia and the 500 million in Europe are meaningful export markets. And so, it's like if the American government wants to get crazy, then crazy it will be.
Well, the problem, of course, is that if what these countries do is they unify to free up trade between themselves, they help to insulate and they help to keep the damage lower. If they unify to retaliate, everybody loses because everybody's costs go up. And so The Economist was actually making the argument that in this most recent issue, that the thing to do here would be to unify, to liberalize amongst yourselves, not to the exclusion of the U.S., because that would just saw down the branch upon which everybody sits altogether. But certainly that there is now this international reorientation to say, well, we need to figure out going to do all of this by ourselves, means that whatever new free arrangements they reach amongst themselves won't extend to the United States, and ultimately it's U.S. businesses that are going to lose out. They'll lose market share, they'll be less competitive, and all of the issues that we're supposed to be solving, the trade imbalance, assuming that's an issue, of course, but purportedly it is, and purportedly we're solving it with this, all of that gets worse.
Yes.
Yes.
Yeah, it does get worse.
All of it.
Yeah, that's like the word, if we erect these trade barriers and you think about the Trump tariffs in the first term, when we did the soft ag products, did China ever come back to the table, or did they just buy from Brazil? They ultimately just started buying from Brazil.
Yeah.
And Brazil's filled that gap permanently. So if China and Japan and South Korea work out a trade deal that reduces trade barriers among those three countries, right? Japan's turning around and saying, hey, we need buyers for our cars. South Korea says, hey, we need buyers from our cars. China could say, we can absorb that demand. Why not? We can structure a thing that allows you to sell your vehicles here. You need an export market? We can provide that to you, right? In exchange, you do XYZ for us. We don't want you to renew that American military base. We don't want it. Get rid of that THAAD. Outside of get rid of that THAAD deployment situation in Seoul, which is our terminal high altitude missile system to protect against, in theory, potential missile attacks from North Korea. Take that off your soil. We'll protect you now. It's a slippery slope, guys.
all you need to know is like the front of the Italian newspapers today in Milan was that the president of the United States has decided that he wants to take Sardinia along with Greenland and Canada, and that all the Sardinians should just move to Gaza because Sardinia is a strategic location for the American security infrastructure. And it was the Italian April Fool's Day joke was a cover article about the American desire to take a piece of Italy for security purposes. But the reason it's a funny joke is because it is not that far from the truth.
I actually I Googled it, not even connecting that it was April Fool's Day. I feel like such an idiot, but it's believable.
That's the thing. You're like, maybe.
I mean, stranger things we've heard.
Exactly. You're like, oh, maybe the American president does want to invade Sardinia. But the point of this gathering every afternoon, which I'm pleased to join in as you guys are, I know, is it's a trading discussion. And the one thing that chaos and uncertainty creates is opportunity. We've all kind of settled on long bonds as the sort of best probability situation. Gold has obviously been sort of a all-star or a risk-off positioning, as you call it up. And I guess it's to your point, Chris, it's like you have to be a fool. I want to say, listen, there's no way. I don't believe Donald Trump. I believe he's full of shit. And I believe you should be short the tariffs. But the truth is, I don't have enough confidence in that opinion to put my money where my mouth is, which is why I haven't prosecuted that here. However, Trump historically has been all talk when it comes to these things. And if that's the case, there's going to be a huge rally, particularly in the Mag 7 and the NASDAQ, which is sort of the leveraged growth scenario, if nothing happens. I'm not going to put it on because it just seems too crazy. But I'll probably kick myself when Trump doesn't put on the tariffs, honestly.
I mean, just being sincere about it, I feel like I can always talk myself into anything. Like, oh, I'm going to get long gold. Yeah, China's buying.
Yeah, you can find a way.
I can always find a way. It's one of the benefits of being raised by two attorneys. You learn how to make an argument. I can make an argument for
almost anything.
Yeah, I can justify most about anything. And like Dylan, worst comes to worst, we can always use the timeless better men have done worse things excuse to justify our moral shortcomings, especially in markets. I don't find that power within me today, and it's been decreasing over the course of the session. I don't know why.
What would you be attempting to even explain?
I feel like
in other words, using your dual legal parentage, if you were trying to talk yourself into a position, what position would you even attempt to talk yourself into?
Good question. I feel like I keep getting asked the question, what's the trade for tomorrow? I have no clue what the trade for tomorrow is. I have no idea whatsoever. I have no idea if stocks are going to go up, bonds are going to go up. I'm not leaning strongly one way. Ilya, you say strong convictions loosely held. How about no convictions held whatsoever? It's a total crapshoot as far as I think it's a total crapshoot.
Will there be movement or no movement? How about that?
I think there will. I hope there will be movement. Okay. The worst possible outcome for me is if this market does not move and chops around for the next few days. That would be the most frustrating situation. At least if we got a break to the downside, okay, new lows, the growth is going to be, growth is coming in. We look at FactSet, we can see the tracking that they're doing for earnings from Q4 2024 to Q1 2025, and there is a drop off in the year-over-year growth rate. We're seeing more companies are guiding negatively for their earnings at a higher clip above the 5 and 10-year averages as we make our way into Q1 earnings season. Right? I could put together that narrative in my head. Yields down, stocks down, economy's shrinking, right? Corporate earnings are down. That's the bear Goldilocks scenario, right? If the bull Goldilocks is expanding corporate earnings, labor market at 4%, CPI coming closer to 2, real GDP between 2 and 3%, earnings growth year over year positive and expanding, then we are in that bizarro world where literally all of that is moving in the opposite direction and on its head. So it's very easy for me to say that, okay, we should be looking for lower yields, higher gold prices, yada, yada. But on the other end, if the market comes out tomorrow and rallies because of these 20% tariffs, doesn't that mean we should start immediately embrace the idea that perhaps we found a North Star? And that after dealing with all the costs and chaos of the implementation of the tariffs, we finally have that direction. And now we can do the business planning and we can do the supply chain reshuffling, this, that, the other thing. That's putting this completely in a vacuum and ignoring the fact that there's the possibility of retaliations by other countries who seem very willing right now to stick up to America and put us in our place. If you follow the international news, if you look at the polling abroad, America is at one of its lowest points of popularity in my lifetime in 35 years. Do I trust a market rally, Dylan, if I think that American exceptionalism is dissipating, that the TINA trade is dying because all of a sudden there are alternatives in the world with all this capital being deployed elsewhere?
Well, how about this? Let's try this a different way. Let's say you take the Trump administration at their word, which is they are dedicated to the end of globalization, the reestablishment of a domestic manufacturing economy, the reduction of income taxes, especially for the wealthy, and the replacement of the reduced income taxes by tariffs, which will, massively reduce imports.
We would need to.
That'll drive a U.S. manufacturing boom.
Well, hold on. Just for the tariff math there, we would need an effective tariff rate.
I get it. I understand.
Closer to 55%.
I got it. I understand all the sort of absurdity that's in here.
Okay, sure.
But does that mean we're buying AutoZone? Does that mean we're buying O'Reilly Auto Parts? Like I'm saying, let's say we set aside our own political preferences or ambitions for our children or the world or our hopes for whatever. And we're like, okay, there's an iron curtain around America. No one is allowed to leave the country a la the USSR. And the only thing you can do is buy and sell products inside the United States. Who benefits?
The essence of the problem is that there is no answer to that question. And if stocks and businesses and consumers had an answer to the question, they could discount it. The appropriate securities could go up and down. The appropriate interest rates could go up and down. The appropriate commodity prices and currencies could go up and down. They could find their new levels, maybe in a chaotic way. The detox that we've been talking about, that Scott Bessent, the Treasury Secretary, has been talking about, could occur. That is to say, we could transition into a different world order. Things could be extrapolated out, and then we can actually answer the question, and markets could know, and there could be certainty. The problem is there is absolutely no way to answer that question here. No way to answer it because we don't know what reciprocal tariff means. We don't know if, as we were saying before, it's tariff for tariff, average tariff rates, effective average tariff rates that include non-tariff barriers. Is this meant to restructure the system? Maybe. Is it meant as a negotiating tactic? Maybe. If it's a negotiating tactic, is all of it subject to change within a week to a month to a few quarters? Maybe. Nobody has any idea what we're dealing with. That's the issue. We don't need to, I think, go too far to look at markets and say what's driving them isn't the knowledge that this policy will do X or Y. What's driving them is the absence of that knowledge.
Yeah, I mean, we can look at AutoZone, we can look at O'Reilly, right? Those companies have certainly done well. They've been on lists for years of companies that would do well on tariffs. But there's also companies that make you can't import makeup from abroad. It's not like Elf Beauty's been doing well. What about JB Hunt? You're going to have to ship more things domestically within the economy, so a lot of trucking activity, right? What did we see immediately after the election? JB Hunt actually jumped to the upside. We go into the month of November. We opened up at 180.62. Shortly after the election, we were at 200.40, right? Tariff delay, tariff onset. Every time there's a weekend of tariff news, JB Hunt's been opening to the downside. So net, there are companies that will benefit. That's the nature of tariffs. It creates political artifice where protected industries and actors within those industries do well at the corporate level. We can make the argument about bringing manufacturing jobs back home. That is an argument that is made on paper. It is theoretical at best. We have recent history from the George W. Bush steel tariffs, from the tariffs in Trump's first term. Fewer jobs in those sectors. Fewer jobs in steel-consuming sectors in America. Steel-producing jobs went up marginally. Steel-consuming jobs went down bigger. We lost jobs as a result of those tariffs. Dylan, you say if we take the Trump administration at face value, what do we get out of this? If we take the Trump administration at face value, as we joked a few weeks ago, detox and transition, that's just fancy words for recession. We're getting a recession. We're going to get a recession. That's what's going to happen. It's also in the back of my head, why else would we trade anything other than long bonds and gold in 2025 if the administration is telling us that they want to do things that lead to recession? We're going to tear down the market to put in new policies to hopefully build it back up to where it was. I do see a headline here coming out about taxes, a few things about taxes from the administration. Yesterday, it was floated that they would potentially raise rates on high income earners to pay for no taxes on tips. Several House Ways and Means leadership members, Tom Emmers, Mike Johnson, came out today and were directly quoted to Punchbowl News and Politico as, quote, ha, 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 no. So I don't think we're going to get a hike in the tax rate on millionaires and billionaires to pay for no taxes on tips. I'm not sure where that goes. Another tax headline that comes out today, SALT tax cap extended up to $25K in the next House bill is currently being discussed. Again, we'll see what happens. But if we're taking everything at face value, Dylan, we still have soaring deficits. They're talking about bumping up the debt limit by $4 or $5 trillion. So you're going to still have soaring deficits. You're now going to have weaker growth, higher structural inflation. and a diminished U.S. role in the world. There's no other currency to step in and serve as a safe haven right now. We can talk about the yen all we want, but the yen's going to deal with its own problems if these tariffs come down the pipeline and they don't have an immediate outlet for their own exports themselves. It's not going to be fun. I like gold still. Gold had a decent day today. It closed up at a new, well, not quite at a new high, it hit a new all-time high before pulling back in at the end of the session. We're at 31.52 right now.
So basically, whatever it is, we're saying we're long recession.
I've been
long the bond, long gold. Is there a
We're
short
long
position?
recession firefighting. Whether we actually get a recession or not, I think that's history will tell us. We won't. I mean, to Tony's point on last call, we don't know that there's a recession or there's been a recession until after the recession. What we're looking for here isn't to confirm recession from an academic point of view, to pat ourselves on the shoulder and go, look at that, look at that. We called it, baby. No. The idea here is to trade expectations of recession firefighting. Not even the firefighting itself, whether it materializes or not, who knows. We'll hear from Powell on Friday. He'll tell us some stuff. The key here is that you're going to get some outcome, and the thought process as a trader is, will markets take this outcome to speculate on the firefighting more or less? And I think the answer is more.
And by the way, this isn't just like a thing that the three of us, Portola wine crowd, New Yorkers, blah, 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 East Coast liberals, elites, whatever you want to frame us as, are discussing. This is a consensus view that recession odds are rising. Polymarket, which, no one confuses with being a place for people
Lefty,
on the...
yes.
I mean, I just fundamentally think that if you're going to be a trader and if you're going to be someone who operates in Polymarket, which is, again, adjacent crypto, you probably fit a profile of someone who's at least moderate to center right leaning, okay? And having done the prediction trade with Jeff Joseph for so long and having done the interviews and conversations with people in the industry, it's generally leaning a center right to the right group of men who are participating in these markets, particularly Polymarket, right? Kalshi's a little bit more center, but Polymarket's a little bit more center right in terms of user base. That's not a good thing or a bad thing, but it speaks in terms of the bias. The bias here would perhaps be to undersell recession, right? But we're at a 41% chance. We go from at the start of the year, right, when this contract initiates, it's at 20 cents. It's now more than doubled to 41 cents. It's gone up over the course of the last few days as the stock market's gone back down. And maybe you'd argue that this is effectively an inverse indicator to the stock market right now. It certainly looks like an S&P chart upside down from the end of February onwards, right? You get that little bounce in the middle of the month, and now we've sold off again the last few days as recession odds rise. Nevertheless, right, it does appear that the market is thinking, it's behaving as if the possibility of recession has been elevated. And the writing was on the wall. The writing was on the wall a few weeks ago. You saw it in this February PMI report, Ilya. And that's effectively what we're writing here. We're not betting that it's definitely going to happen, but the accumulation of evidence is moving into that outcome right now. And so riding the waves of that trend would mean lower bond yields. As long as we don't go to a correlation one event where everyone sells off everything, gold probably stays elevated. And I would point that out too, because gold does really well if we think about stagflation, Ilya. And this ISM report today screamed stagflation impulses making their way through the economy.
Yes, it did. Yes, it did. Just by the numbers here, I'll read them off to you. The price component of this was the highest, the price growth component, measuring the speed at which prices are growing for the manufacturing sector, fastest since June of 2022. So right in the heat of the peak inflation scare. The sector itself contracting for the first time since December. New orders shrinking at the fastest rate since... Give me a second here. May of 2023, employment shrinking at the fastest rate since October of last year. And I'll read you a quote here from the report that I thought was telling. Demand and production retreated and de-staffing continued. This is a fun term because some of the respondents were saying we're not laying people off, we're reducing redundancies and allowing people to come off the rolls with retirement without hiring them back. So we're not backfilling people. So ostensibly these aren't layoffs, but de-staffing. But anyway, these things continued as companies responded to demand confusion, and price growth accelerated due to tariffs. A parallel survey gets confirmed from S&P Global today. Their take is, and I quote again, U.S. manufacturing sector growth stalled in March because of uncertainty linked to concerns over tariff implementation and federal government policies.
I think the spread that we see between the prices and the new export orders here, the prices paid
says a lot.
Jumped to its highest level since 2022. New export orders are now contracting and declining. All of this is in the face of rising inventories. So we have rising inventories. We have orders falling. Okay, so stuff is starting to pile up on the shelves. There's not a lot of demand for it, and the cost of building the new things that fewer and fewer people want is going up. Is there any incentive for these firms to continue to grow right now? The answer is no. The ISM Manufacturing Index falls into contraction territory now. It's a really ugly mix. And you could say for 2023 and 2024, hey, we were in contraction territory for, a bunch of the time. That's fair. We were. But that bounce that we saw at the end of 2024 in the beginning of this year is now increasingly looking like the thesis that was laid out, which is, are we seeing imports and demand pulled forward ahead of the tariffs? Some more anecdata along those lines. We see that Hyundai and Nissan are reporting their best weekend of sales in the U.S. since pre-COVID, as they put out some deals for avoid the tariffs. Same thing for Ford. Same thing for Toyota. Car dealerships are seeing their numbers jump, which I guess means I have to get to a dealership before 4 p.m. Eastern tomorrow to get my new car. Crap. Damn it. This is just, like I said before, I'm tired, boss. It's just.
It's like he's targeting you personally.
Well, if I get the SALT deduction and, yeah. But then again, I'm also in that, Rick Sanchez. It's like, I've seen what you people cheer for. Your boos mean nothing to me. So it's just, when do the Mets play today? We got 2 hours until game time. That's just delightful. Oh, I'm going to be able to watch the Mets on my deck in the sun today. Ugh.
So what you're leaving us with long bond, long gold. I mean, it's come down to this where we can't go near the Mag 7. We got nothing on oil. We got nothing on the banks. We can't do anything in retail. We got nothing in consumer discretionary. We got nothing. And I guess you got your electricity. You have your AI electricity long position. You got Duke Energy, Exelon, gold. What about maintaining the European long position, the Euro rally, meaning the Euro equity rally? Not the currency rally, but the
if you look at German, Italian, European French, equities, they're sinking.
Well, hold on, Ilya.
I know.
Ilya, if we're talking about if people miss the breakout here, right, like risk to reward, the former highs that we have last May and September that we based around here as we turn through February, this is.
But this is in dollar terms.
Okay, so we do HEZU, which is the hedged European equity index. I don't know, man. This looks like we're carving out a bull
down.
Oh, see, this is how I can't. You're such a pessimist. My natural optimism is oh, that looks like a bull flag.
Yeah,
right.
That looks like it broke the preceding low and is now backfilling. Take a look at it on a 4-hour or an 8-hour. You can see it.
No, still looks like a bull flag to me. But Dylan, if you just said the value of everything on planet Earth is now 10 to 20% cheaper as a result of this global economic regime change we're embarking upon now, then wouldn't that also mean that European equities despite their inflation? Or
No, it would. It would. I'm just saying, like, if you think about like what's been working, bonds have been working, European equities were working, your utilities were working, natural gas was working for a minute. I'm just thinking about like where there's been some positive, where there's been price appreciation, and where does price appreciation live? And here the natural gas rolled over, Europe's rolling over, bonds not
I don't know
rolling
if
over.
European equities have been working. Being long the euro has been working, but since
European, look at the
since the peak in
European
March.
index.
Well, I mean, since the peak in March, the actual Euro stocks index, not the derivative ETF, which is constructed in US-based terms, the actual Euro Stocks 50 index, since its peak on March the 3rd, is down 7.5%.
March the 3rd was 3 weeks ago.
Exactly. This is a pall upon everything because, to your point, this hurts economic activity for everyone.
Report out here from the Wall Street Journal that the U.S. Trade Rep's office has been asked to give Trump a third option for tomorrow's tariffs. Oh, there's no plan. There's no plan. There's no plan.
Either that or the show is this good and we are that dumb.
No, the only show
to fall
that's this
for
good
it
right
again
now,
and again and again, because the misinformation leaks aren't misinformation, they're leaks on purpose to keep the show on edge.
Okay, so I really think the whole talk of a Trump third term is just totally nonsense, right? It's constitutionally illegal. I've studied con law. This was one of the cases. Like, how come? Why has this been a non-thing since FDR was president? And like, I specifically remember going through all this. It's a real non-issue to me, but it's the kind of thing that plays right into the, resistance liberal, emotional wheelhouse of Trump being a dictator and, a fascist and America's Hitler, yada, yada, yada.
And now let's talk about it for 90,000 hours.
So we're going to focus on this as we head into tariff implementation week. And oh my goodness, none of the other countries that we've been trying to shake down have responded in the form and fashion which we thought they would ultimately be caving immediately to our demands. And so let's put a distraction out into the media ecosphere so we can try to figure out this tariff thing after declaring it Liberation Day. And then I just put that in the context of the headline I just saw now, where the Wall Street Journal reports the administration is asking the USTR for a third tariff option for tomorrow. Dylan, this feels like asking your teacher for an extension the day before the essays due. Don't really know how else to put it.
Or it feels like as predictable as a rallying oil price in the face of Iranian retaliation as an opportunity to short oil, that a global anxiety attack about Trump doing tariffs is as predictably false as a Gaza or as an Iranian retaliation.
I mean, that certainly could be, by the way. It certainly could be that what the markets walk away with tomorrow is, oh, now we have certainty. And the more you keep the situation uncertain now, the more like certainty it looks. And the more like certainty it looks, the more markets rally in relief, and you get to parade around and go, see, told you.
You know how I know tomorrow's going to be a disaster?
I love the premise.
Paulina, the Republican congresswoman, was trying to put up a rider to a vote today to allow new mothers and fathers to vote by proxy in Congress, which is something that they've allowed previously during emergencies. And the rider did not pass. And then Speaker Mike Johnson canceled all other floor activity for the rest of the week. It's Tuesday. They just cleared the congressional calendar until next Monday. Small things, small pieces of writing on the wall, right? Small pieces of writing on the wall. Reps are being sent home. They're leaving DC this week. Now, that sets up an interesting dynamic. Do you really want your reps back in district to deal with this? Now, I bring up Newsmax here, though, because it's Trump world adjacent, and it is the hottest IPO ever. What a chart. Opens up at 14 yesterday, listed at 10. Bankers really dropped the ball here. They really dropped the ball. Closes today at 242. Dylan,
Wow.
This has a bigger market cap than Fox News now, even though Fox has about 1.2 million viewers on average in prime time per night. Newsmax has about 240,000 viewers on average in prime time. They also only had $80 million of revenue last year. Thank you, Nick Batista, for that info. Unfortunately, it is impossible to trade right now. The margin on shorting it is about 550%. There are no listed options yet. Dylan, is this the madman's delight moving forward? This share has gone, again, $10 up to $242 in 2 trading sessions. What are we doing here? What's the plan?
Do you want to get, I mean, that is an existential question that I shan't attempt to answer as it pertains to what are we doing here. Are you suggesting a put on Newsmax?
When the options are listed, right, we can't trade them yet, and it's impossible to short. It's just too expensive to do so. But I don't know. That seems like a lot in a little bit of time right now. I wonder what the window is that they can't sell their shares. Gosh, to be an insider right now and be sitting on a position where your equity is valued at $10 on paper and now it's trading $242 in the market. Nice problem to have. Either way, though,
shorting TMTG as a stand-in. Trump media.
Yeah, DJT. It's 5.1 IVR. I don't know if that's a good stand-in. Plus, if you're following what's happening with World Liberty Financial, and they're building more bona fide streams of business. One of the Trump boys, I forget which one, is on the board of Kalshi now. So they're branching out. It wasn't worth $80 a share, of course, when it was up there, but. Is this company really at bankruptcy risk for the next 4 years, Dylan? I don't think so.
Obviously not.
Obviously not. All right, Dylan, I want to, you start talking about existential questions here, and I want to give you the floor here as we end the show. There's a special election tonight in Wisconsin. Elon Musk is calling it the most important judicial race in human history. It could very well determine whether or not humanity gets to Mars. You've covered a lot of politics and finance in your time. I don't know if I disagree with Musk. It feels like today is a really important vibe turning point because there's also special elections in Florida. Do you look at this first 72-hour window here at the start of April between Liberation Day and these special elections as a critical turning point for the market, perhaps not just for this week or next, but realistically for the next several months, maybe the rest of the year?
No, I don't. I think the market will function based more on the degree to which the executive suite has to continue to pull their punches as it relates to investment in the future. And I don't know that that is entirely determined based on the next moment in time or the next 72 hours. However, I do believe that the next 72 hours are significant insofar as they represent the first referendum on the political power of Elon Musk, because Elon Musk has been deemed to be the ultimate kingmaker by virtue of the Trump election in November. And there hasn't been an electoral event that's been a referendum on Musk's power to control as a political kingmaker. So I believe that really with the next 72 hours is much more of a referendum on Musk as a relevant political factor. I say that because there's been actually a decent amount of polling anyway, and who knows from the polling, honestly, but that suggests the more Musk jams his beak into the Wisconsin election, the better the Democrat does. That Musk is actually a negative electoral force at this point. And that would be a meaningful turning of the worm, more so than anything as it relates to the market. So I think that this is as more than a referendum on or prosperity or growth. This is a referendum at this moment on the continued influence and relevance of Musk himself in the American electoral process. And it will either empower him further if the outcome is to his preference, or it will alienate him in some way and sort of cause a bit of a pause, surely not an exit, but a pause, if in fact the outcome is opposed to his preferences. But I think it's more of a Musk referendum than it is a market referendum.
Well said. And with that, overtime is now out of time for this Tuesday, April 1st, 2025. No April Fool's jokes here. We'll be back tomorrow for Liberation Day. Same time, same place, 4 p.m. Eastern, 3 Central, right after last call. So we very well may be covering the tariff announcement live. Be sure to tune in. So for Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Vecchio in New York. Good luck trading. Stick around, though. After a brief break, there's more Tasty Live. Ilya Spivak, of course, is back with Macro Money.
See you there, everybody. Well, the markets look uneasy as we await quote-unquote Liberation Day, the day where we're going to get an expansive announcement of what could be a vast remaking of U.S. trade policy, what could be a centerpiece of the economic pivot that we see with the new Trump administration, what could be a negotiating tactic, what could be something that ends up lifting the markets or sinking them. And the operative term there is could be, because the lay of the land here seems to be that we really don't know what it is shaping up to be. And this is what we're going to talk about here today on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. The question before us, of course, because as ever, as traders, we cannot tell the future and have to try to figure out how to handicap a range of outcomes, is whether stocks, which have been aggressively beaten down in anticipation perhaps of what we have coming tomorrow, we'll see, whether that beating can now cease. Because, of course, as we know, when markets see speculation be met with reality, they discount that reality. Whatever adjustments take place we move on. So are we getting to a place where these markets are ready to bottom, or are we getting to a place where the pain is likely to multiply? This is at core the question as we head into this announcement, and of course have to trade around it with lingering uncertainty. And of course, uncertainty is forever the feature of trying to trade a future one does not know. And so even in this very tenuous situation, there is perhaps a trade to be had. And so let's break this down piece by piece. So, of course, looking at stocks here as a starting point, this is how the S&P 500 has responded as a kind of catch-all for market-wide risk sentiment and certainly Wall Street risk appetite. We can see that since the second half of March, we've had this precipitous decline. There was a little bit of a corrective rebound, obviously, here at the start of March to retest the underside of the range that we ultimately broke through along the way of these shattering 4 weeks. And we are now back to pretty much where we started. Those lows from earlier in the month is where we're once again kind of huddling around over the past day or two. Moreover, as we try to retest back through what was former resistance turned support, a kind of inflection zone right here, that's holding up as an upside barrier after we broke through it to the downside. So it's as if we got to a point of maximum concern here, and having had a little bit of relief, we've now returned to the decision point, the place where the initial sell-off stopped and where we have to make a decision now about whether the problem has been duly priced into the markets and we can move on, or if it has not. It's a parallel story for the bonds. We can see here that as stocks have been going down, so too bonds have been going up since the beginning of the year. And here also, since the beginning of March, the move ran aground, pulled back, and has now returned to that early March starting line. We're back to the early March starting line on the stock sell-off. We're back to this early March starting line on the bond market rally. Now, what is all of this about? Well, needless to say, the operative conversation is about uncertainty vis-a-vis tariff policy and fiscal policy more generally. Just today, we got the updated ISM Business Confidence Survey, a PMI survey. This is giving us the latest on where U.S. Purchasing managers who are at companies with the task of looking forward, anticipating economic activity, and thereby figuring out inventories, figuring out staffing levels, figuring out how much capacity is needed. And so in that this is their vantage point, they are useful to poll about where the economy appears to be heading. This was where they were in March, according to this particular survey, this Institute of Supply Management survey. And we can see there was a contraction in the manufacturing sector here, as expected, and a faster one. This index operates around a center line at 50, where that's neutral. Above 50 is growth. Below 50 is contraction. And here we are below 50. The further you go below 50, the faster the contraction. The further you go above 50, the faster the growth. So here at 49, we have contraction, and it's faster contraction than what the markets anticipated at 49.5. We're going to get the service sector update later this week, but for now, here are the internals of the manufacturing side. They are, in plain English, scary looking. This surge in the prices component, suggesting what the input costs are and what the pricing structure is in manufacturing, point to the fastest inflation since the middle of 2022, which of course was near the peak where the Fed's firefighting finally started to have an effect in the second half of that year and inflation started to come down. So a blistering rise in prices, even as we get contraction in both employment and new orders, and indeed the fastest contraction in some months. So what does the report make of all this? Reading directly from the ISM report, quote, demand and production retreated and destaffing continued as companies responded to demand confusion and price growth accelerated due to tariffs. In parallel, we got a revision of a similar PMI report, this one from S&P Global, same type of data, again, centered around 50, all the same rules apply. But this one from S&P Global, in fact, this was the survey that really kicked off these concerns for the markets when it started to report this slide in not just manufacturing, but the service sector, and with it, the overall economy. So these numbers, it very interestingly show a front running of the tariffs and manufacturing improving against that back story. And now turning down to basically standstill. These numbers initially had a slight contraction when they were preliminarily reported, and these are the preliminary numbers for services and the composite that will be revised later this week. This is the final number that was reported today. It's a little bit better than the ISM one in that the ISM one is contracting, and this one is basically flat, showing manufacturing is essentially stalling. But it was this survey that showed us that what we've been seeing is a sharp decline in service sector activity, and the service sector is a much bigger part of the overall economy. As we can see, the composite that includes both manufacturing and services basically follows services because it is close to 70-80% of the economy, depending on when you look. And so when we look at this, then this was where the markets really started to get concerned. They said, uh-oh, it isn't that we didn't know that there were tariffs coming. It isn't that we didn't know that a retrenchment on government spending is coming. We knew all these things back in November. What we didn't know, and what we continue to not know, is implementation, to the extent that tariffs come on and they come off, plans change frequently, the nature of the expansive, broader plan continues to be clouded. And so what that's doing is it's telling businesses, don't spend money, wait for the environment to become clear so you can make your 6-month, 12-month, 24-month inventory, staffing, investment decisions. And what that's obviously done is it's ground activity to a slower level. The same thing, of course, showing up on the consumer side of the ledger. Here, consumer confidence has fallen off and inflation has surged, again around the same story. The respondents to this survey from the University of Michigan are universally citing that, or at least in mass numbers, universally is probably too strong a word, but in mass numbers citing the issue around tariffs uncertainty as part of these decisions, and suggesting that what the tariffs will do is they will boost prices for things, and so much as a tariff is basically a consumption tax on imports. And so we have seen a surge in inflation expectations back to 5%, again, near the peak from mid-2022. Notice the extent to which this lines up exactly with what's going on in this ISM manufacturing survey. And confidence has, of course, fallen off back toward the lows of this inflationary cycle. It was once inflation started to come down, the expectations started to come down, and once those started coming down, sentiment started to improve. Well, we're back toward the starting line here, both on current conditions and on expectations. And of course, with current conditions, it's a little bit better. With expectations, it's a lot worse. And overall sentiment subsuming both indexes lies somewhere in between. In response to all of this, the markets have of course, concluded, especially after the administration has dismissed their concerns, that the relief is going to have to come from the Fed. And so what we've seen is a significant dovish shift in policy expectations, again, since mid-February, as all of this started to hit the fan. You'll notice this looks quite a bit like what the S&P looks like here, a sharp down move and then consolidation after a little bounce, then back toward the low. Consider how much that looks like this: a sharp down move, a quick bounce of relief and consolidation back until you come back to the low. So what you're seeing here now is 73 basis points in rate cuts for this year. That's 3 cuts effectively baked in. 31 basis points for next year, at least 1 cut, and some chance of a second, about 6 basis points in the direction of a second next year. In all, 104 basis points in easing being priced in, whereas at the beginning of this move, we were looking at maybe about 50. And at the start of the year, maybe somewhere between 50 and 75. And so with that is how we look at what comes next and the market reaction. So we can see here that initially all of this looked like a growth scare. That, of course, comports with falling inflation expectations, falling yields, and a falling dollar anticipating Fed rate cuts. But what we see now is more ominous still. Inflation expectations have started to come back up. Meanwhile, yields remain depressed, and the US dollar is hovering near its lows. So we appear to be looking at the very issue that the Fed was highlighting in its most recent update of economic forecast. This is the latest set of numbers, and the Fed was very clear, saying, we don't know what this is going to look like, much as nobody else appears to, but we do know that historically tariffs are bad for growth and tend to boost inflation. So what we're going to do is we're going to increase our inflation expectations for this year at the headline, 2.5 to 2.7, 2.8 at the core. Next year, an increase as well. And we're also going to lower our growth expectations from 2.1 to 1.7, from 2 to 1.8 next year, and even a little bit out to 2027, although by that stage, it's really very difficult to forecast. So those are very loose numbers, as it were. And so the expectation for the markets, ostensibly then, is the relief valve to all of this, at least that's what the markets seem to be saying, is more easing. Because to the extent that tariffs hurt growth, they are going to lead interest rates lower, because that lower growth will pull down on inflation and give central banks more room to cut. In fact, if we look at the policy expectations for a whole range of central banks for this year, we can see that for all of them through this period, the outlook has become various versions of slightly more dovish, be it the Bank of Canada or the US or the European Central Bank, even with its recent rethink of what may happen next year around the inflationary impact of defense spending, and of course the euro's rally around that. Nevertheless, all of the expectations for this year, against the backdrop of all of this tariff uncertainty, all of them have moved toward more dovish settings, with the exception of the Bank of Japan, where rates are moving at such a snail's pace and are so low relative to everybody else that we've gone from a slight bias to hikes to basically standstill on expectations through all of this. So modestly dovish in that we have stopped the incline here and shifted to neutral, but considering how low rates are here, that's enough of a shift to give you symmetry with the tone that's going on here. And therein, then, is the trading essence of what comes next. Now, the problem for the markets with these tariffs, as we've alluded, isn't that they are coming. It is that nobody seems to understand what exactly is it that is coming. The president has talked about reciprocal tariffs. And the idea isn't so much that it's just tariffs, but reciprocal trade barriers, meaning that he would like to mirror U.S. trading partners' policies back at them. That is to say, if a country is applying a certain tariff on the U.S., we want to do exactly the same thing in reverse, which sounds sensible in theory, perhaps, But what that actually means is a complete black box. For example, The Economist anticipates that if we actually went tariff for tariff with each trading partner, we'd have 2.3 million new taxes. Just new tax rates, new tax numbers to keep score of. If instead of targeting individual policies, we said, okay, we're going to normalize average tariff rates. So if a certain country has, on average, XYZ tariff rate, we're going to try to do the same. But how does that account for non-trade barriers like quotas and punitive regulatory barriers that some countries have? All countries have against one other trading partner or another. And how does that factor into this? Because the president has said he wants to have reciprocity there as well. How do you calculate an effective tariff rate? Do you just put a blanket one on everyone? That's kind of what we have now. We have a single external facing tariff for everyone, irrespective of the trading partner. And maybe what all of this means is just an increase in that. Nobody really knows. Moreover, it's unclear if these tariffs are a negotiating tactic, that is to say, they might get negotiated down, and so whatever is announced isn't the final answer, or if they're an attempt to, in a long-term way, remake the system all in one shot, and this is that announcement. If you look at the conversations that have been had between the U.S. and Mexico and Canada in recent weeks, then you know that renegotiation can happen with a phone call and changes can be swift. So is there really more uncertainty here even after this announcement, or isn't, seems to be the crux of the matter. All of this consternation in business and consumer confidence surveys is, again, rooted primarily in uncertainty, not in tariffs as such. Them we've known about for a long time. And so the key here then is, does this Liberation Day announcement give the markets and consumers and everybody else looking something solid to extrapolate over time? And on that basis, to take action. If the answer is yes, then perhaps stock markets can find a way to like it, at least in the diminishing uncertainty of the environment. But that there is tariffs is itself a growth scare. And that might beckon more easing. And in that sense, bonds may keep going higher all the same, because of the expectation that whether the environment is certain or it's uncertain, the Fed will have to do more heavy lifting on the growth side. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. As ever, today, in just 30 minutes' time, as it is every Tuesday, I'll be on with Victor Jones for The Price of Truth. I am on with Chris for Futures Power Hour this Friday, back with Victor and Tom for First Call this coming Sunday, writing for the News and Insights portion of tastylive.com, commenting